YouTube? Hey, it's time to get back in our bag, man. If you guys are ready to make some money this week, please tap in, lock in with Coach. As always, I got a jam-packed video, so please make sure you like, subscribe, help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. Guys, we will be heavy in our bag this week. Please know that. Check this out, man. I got this quick update. Trump is looking to host a last-ditch talk to avoid a government shutdown. This week, Wednesday, everybody mark your calendars so that you guys always know the catalysts that are on the horizon that can impact the market, okay? We have a potential government shutdown looming this Wednesday, okay? If they don't come to agreement, then we are going to shut down. The thing we don't know is how long that shutdown will be, okay? The market, though, typically, remember I taught you guys that Wall Street ain't Main Street. So what you guys might think is in your normal life is bad is good in something else. Like, quick example, okay? If you've been with me, you remember this. When stores go out of business in our neighborhood, in our communities, we'd say so-and-so went out of business, they didn't do good. But when Macy's, think about all the stores y'all know. If the malls and stuff ain't popping no more, I want y'all to think about stores. I'm gonna use Macy's as an example because we made millions of dollars off of what I'm about to teach you real quick. When Macy's close and go out of business, Wall Street make the stock go crazy, because in the market, what we do, when you close an underperforming store, business people look at it as if you're getting rid of dead weight. In the culture, in the community, oh, that store ain't nothing, ain't nobody go there. We have the wrong mentality. So I'm prefacing all of this to teach you guys Main Street and Wall Street are two different worlds, okay? It's called the upside down. So, for example, if the government shut down, the stock market gonna go crazy to the upside. Mark that down for me so that you know these things, okay? But if we come to an agreement, it's still gonna do decent, but now there's no certainty, there's no...
I don't know about that. Is the stock market going to go up on a government shutdown? I guess we'll see. I think it's an interesting theory for sure. Could be real. But let's jump into a little breakdown here. And then we'll get back to Christine. So, here's the stock. Oops, probably don't need the solar light in the frame, do we? This thing is dope though, look at this thing. It's 4,200 watts. Look at this. Thing is bright. Real bright. But it does need to be the frame. All right. There is one stock that is about to break out, in my opinion. It is the parent company of TEMU. TEMU makes the tiny Chinese items that you buy online. It's an e-commerce app, e-commerce website. It's a lot like if TikTok and Amazon were combined. The stock looks like it's ready to break out. China stocks had money flowing into them last week, and they are shaping up nicely. Cathie Wood buying Baidu and Alibaba doesn't hurt. So let's get into the chart. Let's get into the reason why PDD, the parent company of TEMU, is the company to buy right now and what they do.
This is Sam Putnam.
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 So here's the chart right here. It doesn't get prettier than this. Compressed days, big flag. When we zoom right out, we have this massive line coming down and change of character, breaking through that line. But before we get to where to buy, what levels to buy at, this is what P2 does. It's Pinduoduo. That's the best I can do for pronunciation. It's an e-commerce platform, lower cost goods, social commerce. If you've seen TikTok live selling, if you've heard Gary Vaynerchuk yelling about this, he likes to talk about online versions of garage sales. It's massive in China, $40 billion or more, and it's only a few $1 billion in the United States, so that's coming to the US. This company operates TEMU, okay? And it's coming to the US, so that's part of the growth story is live selling could come onto the TEMU app. If you've ever used the TEMU app, it's basically like using a casino. It's gamified up the wazoo. This is a challenge, okay? 40% profit decline compared to a year ago. This company got yammered by trade policies, the tariffs. But they're one of those companies that actually can't afford to raise prices. So they are trying to invest and get higher quality products. So if you feel like the stuff that you buy off Temu is just, not great, you're not alone, but they are working on it. And this is actually okay to not do share buybacks or dividend payouts. That's not really a big deal. Sure, if it was like the Apple of China, then you might be worried, but it's not. It's more like the baby version of TikTok in China. So let's get back into the charts and understand what we're doing here. What we do on this channel is we look for 3 to 5 day bursts of momentum. So you can see here's a burst, 20%. Here's a burst in one day, it's 20%. Here's a burst. And this is a change of character where we were going down, we have this line coming across, and all of these lines here, different colored lines, are coming together. And you can see where they all came together back here in mid-2023. We had this burst upward. This is actually more than 3 to 5 days. But if you sell half 3 to 5 days and you let the rest ride, well, you might sell here, you might get up here and then say, whoops, now it's going down, I'll sell here. You probably don't sell at the top, right? But the point of the 3 to 5 days is even if you get one of these and it goes down, you still sold half, so you're still making money. And that's why I can come up with so many stock ideas here and still have them be money-making ideas, because I'm not saying just hold them forever. Temu survived the tariffs, okay? We can literally see on the chart what happened here. This is 2025. This is the tariff start, right? You see it in the overlay in the background. This is the SPY in the background. And this is late February. The SPY started to go down, started to get pretty volatile, and PDD also went down. Okay, this may not look like much. This is about a 30% decline from 120 down to like 100. Pretty significant. Massive drop in the SPY. PDD sort of weathered it. And now it's coming out of this long flag. So we'll jump into exactly where to buy, levels, and a daily chart. But before we get there, let's again look at why this company and sort of keep the attention focused here in case you're more interested in what they do. There could be challenges with shipping. If you've looked on TikTok, a lot of the items that they're trying to sell have no shipping cost at all. It's free. Temu does have shipping costs, so there is competitive pressure there. Alibaba also is a competitor. But despite all these risks, which we've talked about, the tariffs, if it's actually okay to lose money on these orders because they have such low prices. Now they're trying to raise the shipping, but they have to compete with TikTok. TikTok makes money with ads, so they don't need the shipping to be super high in the beginning. So they're still making money. Of course, people are going to complain that China just has a lot of scams and rip-off items. And of course, there's the whole Chinese Communist Party Jack Ma uncertainty where anything could happen. But despite all those risks, TEMU's hanging in there. And all you can really say is these type of reports can keep coming out. You know, rip-offs, competition, tariffs. And if we look at the actual chart, this thing is breaking out, okay? It's following the market finally. It's turning around. So what we do here on this channel, again, is we follow the chart. We don't follow just a fundamental reason. You notice I don't even talk about the price to earnings ratio, the PEG ratio, the discounted cash flow valuation, beta, long-term debt. You know, probably should look into debt a little bit for a lot of these companies, but it's baked into the chart and we're not having to hold this for months, okay? Talking about 3 to 5 days. And even Kathy Wood, if she was a little more agile, I'm not saying she doesn't have technicians who are agile, could get into it. She has $6 billion, right? So if she puts maybe 5%, which is, you know, way more than her current positions. And Baidu and Baba, I think she's put like 1% in those stocks. This is Baba. This is Baidu, which also looks excellent, which I'll talk about. But let's say she puts 5%, let's just grossly exaggerate, of $6 billion, that's $30 million. And this stock alone trades 5 million shares times $100. That's 500 million. So less than 1/10 of that is 50 million, is 30 million. So she could get into this without much slippage in a single day. So if she can do that, how easy could it be for us who are not putting 30 million in this stock, right? And that's all that to say. Everyone is seeing this flag, and that's why it makes it exciting. It's not like we're looking at a tiny stock making a flag. Not that this is a tiny stock, because the number of shares traded is insane right now. But I was really thinking more about an intraday flag. This is why day trading is so challenging, because you might see a flag, but there's not much volume traded here. So this can just break, and not many other people might have this same exact setup. Like, look at it, I'm on a 30-day 1-hour chart. What is that? It's got all this like shades and different color lines. And over here, these lines come by default on Robinhood, just to show you how widely used they are. So when they all come together, everyone sees that. And that's why so often you see these type of breakouts. I always talk about, look at AppLovin to give an example of how these things can really go. Where everyone sees this type of flag, this line, and then when it goes, boom, it can go. So that's PDD. That's the play. The lines to look at is about the 130 whole dollar level going all the way back to July of 2020. Well, this is actually August of 2024. July is a little bit before. It's more than a year ago. So a lot of those people have even sold, but it still visually appears on that chart. It will be noted by some algorithms likely as a pivot point in the past, and certainly by people trading it. And there's a ton of people just like you and me, including traders who trade hundreds of $1 million, who trade with their eyes. So 130 is an important level. We're right there. So you can risk $1, make 10, 20. And importantly, again, if it goes up, say 10% from here to 142, say, ish, whatever it is, 145, 140, you sell half, you just locked in $10 a share, And then if it does pull an app, which, this is rare, but if it does go up $100, $200 a share, well, you can just let your half ride because you've locked in during the day. So if it has crazy gaps overnight, doesn't matter. Okay, you can see PDD does get kind of gappy overnight. So that's why you want to sell 50% at 10% up. That's the safest way I can give a recommendation. So that's the stock. That's PDD. I'm not going to jump too much into more about it, but this is a major piece of news today. OpenAI did introduce instant checkout today, which means you can buy things through ChatGPT. Etsy went crazy, as well as Shopify, because they're helping out with that integration. So you can buy from Etsy sellers and Shopify merchants soon, which is anyone with a Shopify store, which is a lot of people, including huge companies as well. They use Shopify Plus. So that's a huge partnership. They're already partnered with Stripe, which is a massive private company in the tens of billions, if not more. So this is the big news, and PDD basically held in there on that news. We could look at similar tickers. We kind of already did with Baba and Baidu. There's some other Chinese companies as well, which look okay. And there's the Chinese ETF Yin, which is similarly flagging. So that's the ticker. That's what they do. And if you like these type of stock ideas, if you want to get them in a timely fashion, this video might come out a little bit after it's recorded. Head over to stockscommunity.com. Try it out for $25 for 7 days. Give it a little test drive, see what it's like to ask any questions you might have, and get some stock ideas morning of and see how they perform. This is not financial advice, but I hope it was helpful. Hit that subscribe button if you want to see more ideas.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's check back in with Chris Sane here. Do think he's got some good ideas with Main Street and Wall Street.
Lack of uncertainty that's on the horizon. All right, look, man, I got a few things that we're going to get busy with this week. Tesla, guys, ticker symbol TSLA, sitting at 440. Look at this price. We got to get to and through this level to go higher, okay? 440 is resistance. Everybody write resistance down. Resistance is like a ceiling, temporary ceiling, okay? A glass ceiling. Let's call it a glass ceiling because we can break through glass. So this is 440, okay? We are currently at 440, but we gotta get over this hurdle. Any track runners in here, we gotta get over the 440 hurdle so we can get to the 445 hurdle, okay? And 445 opens the door for 450. That's the target for this week, okay? That's the target for tomorrow if we get over 440. So I want you to mark that, watch that, so you already know where we're going if we get over 440. It's going to be 445 and boom, a quick move to 450. However, if resistance hold up and we can't get above 440, then this will drop to 430. A $10 drop from here. It can go lower, but I want you to know the range, all right? Put this on your radar. This is a great chance to get busy. Definitely to the upside, but ultimately in both directions, depending on what it do. Don't guess, don't gamble, react for me, okay? Understand, guys, if you learn your technicals, if you learn how to read a chart, if you learn supply and demand, if you learn your support and resistance, guys, you will change your life, okay? The money is in the charts. Don't never forget this. This is not about gambling or taking unnecessary risks. Know what you're doing, okay? And if you need to know at a more greater depth, make sure you hop on a coaching call so I can break all this down for you in a way that you understand it, okay? What else Coach got for you? Uber, ticker symbol UBER. Remember at $20, I told you this play was going to 100. We are knocking at the door. Last week, I didn't get a chance to pop on here for you guys, okay? We hit 102. But remember I told you, when you hit it the first time,
HIMS looks good.
they going to yank it back down, okay? They going to yank it back down. That's what they did. We got to do that 3 times. Remember, everything we do, we got to do it at least 3 times for us to go to the next level. I'm putting Uber back on your radar as a sleeper. This is a little dark horse type play, okay? I'm putting Uber on your radar once again, because one of these hits of 100, we gonna just go crazy, okay? We don't guess. We don't time the market. What do? We get in position. I'm telling you what's coming. Our job is to get and be in position, locked, loaded, ready to go. Let me know if that's understood, okay? Uber to $100. I am projecting once we finally get through it, 100 is resistance now. It's going to become support, and Uber going to take off. Mark my words, man, so we can at least see if Coach is right on his technical predictions, okay? What else I got? Lyft, ticker symbol LYFT. Everybody keep asking, Coach, can I get in? Yes, you can. This is the type of pullback we like, okay? At 21, 20, 19, 18, or 17 are all, write this down, dollar cost average buy zones. So you can get in here en route to 30. You can get in at 20 en route to 30. You can get in at, write this down, 19 en route to 30. Okay, I don't want you thinking because we had this initial run. We've been in this since $14 and $15. We already ran up to $23. Now it's pulled back. Okay, it's like a rubber band. You pull a rubber band back and let it go and watch what it do. That's what this is bubbling up. So if Uber gonna hit 100, remember I taught you guys about there's cousins in the market: Lowe's, Home Depot, UPS, FedEx, Uber, Lyft. Remember to write this stuff down, man. You're not gonna find this in a book. Nobody gonna tell you this, or they'll run with it after I have told you this. Okay, it's called cousins. It's family. Okay, they move alike. They move adjacent and alongside
The
each other.
UK just announced you can marry your first cousin.
Okay, Nvidia, AMD. Just go study this stuff, and you will be like, oh my God, I ain't never noticed. So like, if you ever building out your portfolio, you can buy Uber and Lyft. You only need one, okay? But I'm just trying to teach you something. Like if you needed to make money off of 2 plays at the same time, if you had 50,000 and you wanted to put 25 in one, 25 in the other, you can do that. If you want to put 25 in Nvidia, 25 in AMD, you can do.
Okay, let's jump into a little breakdown here. The ticker is HIMS, and that's the chart. And boy, that gap down was absolutely traumatizing, but it's behind us now. It's all good. Oh my God, though. It's a horror story there. But let's jump right in and talk about HIMS. There is one stock that is about to skyrocket, in my opinion. It had a partnership with Novo Nordisk, the massive pharmaceutical company. It had a challenge with Novo Nordisk, who put out a statement that their drug was incorrectly basically described, and that's pretty dangerous when you're a smaller company like HIMS is. That's the ticker, HIMS. The stock cratered, and since then it has bounced all the way back, looking like it's about to break out. So not financial advice, but this company looks ready to go. So let's jump into not only the chart, but also a little bit about that relationship with, it's basically an Eli Lilly, Pfizer type company, Novo Nordisk, that is a huge, huge contributor to HIM's success so far.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So here's the chart, and if we just connect some lines here, okay, we have a line way up here. You could start to mess around with lines, but I don't really do that, right? You have a line here, you could start to mess around with lines. The better way to look at it is just to say, let's just go on a weekly chart, okay? What does it look like is happening here? It looks like this thing is getting tighter and it is going to break out. Is it going to happen over here? Or is it going to happen right now? It doesn't really matter to us because all we have to say is, can we risk $1 or so and make 10? That's the name of the game. This is the daily chart. Can you risk $1, pick a line, and make 10? You definitely can. So that's the argument for HIMS on the chart. We'll get back to it because this chart actually tells a story. This is a horrible, horrible gap down. So there's danger in buying biotechs, but we'll talk about that. So what does HIMS do for people who are like, I don't want to look at charts. I want you to tell me why to buy it. Fine. They do digital healthcare. You've probably seen their ads for weight loss, men's health. That's sort of a euphemism, right? Kind of like Viagra. They do GLP-1, so they're right in the center of this massive trend. And testosterone, which is also big. They do have some issues, okay, you could say. And the problem is that this is the drug that Novo Nordisk got a little aggressive with them and made that big drop that we see here. It's called Wegovy. And when that news came out, you can see this looked pretty great, right? This is actually a great broader lesson is if you try to buy a stock when it hasn't broken out yet, sure, and you can see I did try to buy it here. You can get a great entry, but if you get it before it breaks out, which is up here, well, it could also chop around and talk about chopping around. Now, if it had already broken out, would Novo Nordisk have released this news? They might have. It might have not been related to where it was in the price chart. But anyway, talk about a way to learn a lesson. Whether that lesson is buying in a range like I was describing, how it hadn't broken out, or whether that lesson was buying a biotech and realizing that, hey, this thing could drop 30% or whatever this is overnight. Pretty gnarly. So you have to be careful position sizing with biotechs, but they also have some absurdly large moves like we recently saw with this QURE, Huntington's disease. Possible major step towards a cure. Even after this thing gapped up, and I'll talk about this more, it went another 40%. So there are opportunities in biotechs as long as you're careful with position sizing. So that's what happened. Wegovy, they got a notice. Well, we all got a notice. Novo Nordisk released a piece of news, press release, saying that they don't necessarily support how HIMS was talking about Wegovy, which is the medication that they developed, collaborated with HIMS on. So the HIMS medications are not FDA approved. So how HIMS talks about those is pretty important, the language they used, and the FDA was not happy. And Novo Nordisk was not happy with how they were talking about this Novo Nordisk partnered sort of medication. I don't even know whether to call it a medication or a drug or not, but you don't have to be a biotech expert to know that stock is in a good spot to break out. And the fact that HIMS has bounced back just shows how resilient they are. They did put out a letter that was pretty slightly ambiguous, but overall was optimistic in terms of their future opportunity despite these major stock declines. The CEO basically knows how to do PR, I'll say that. So this is what I'm talking about, the 30% drop after Novo Nordisk terminates partnership. I don't know how to talk here. That's the drop in June. And this is what we were saying. It's Novo Nordisk's weight loss drug, Wegovy. It's not Hims. And Novo Nordisk wasn't happy about how they promoted it. So they ended the collaboration, and that word ended was pretty harmful. And 30% is basically shows how much the company was propped up by Novo Nordisk. And could I keep talking about these? I could. I don't know how much you want to hear about them. What you probably want to know is, where do I buy it, right? So there's a line going back here to 55, which sort of got hit here as well. So it's at 59 right now. And you could risk 55, but you could also risk $1, which is what I kind of like to say as a good risk. Just keeps it simple, right? Risk $1, make 10 or more. And really, as I've tried to make more clear, I don't know how clear I've been about this in the past, what you really want to be doing is, see how there's a 3-day burst here? It's actually very clear in this stock. This one is actually a few more days, but it's 3 big days. Like here's 3 days, just about 10% move, and then it pulls back, right? 3 more days, 10, 15% move, pull back, 3 more days. So it could pull back here. That's why I'm saying you could buy here or you could buy down here. You know, you don't necessarily want to buy right up here immediately, but we don't know exactly what's going to happen tomorrow. This video is not like, you know, down to the day or down to the 12 hours. This is when you should buy it. There are instances where that's more obvious. Maybe with Tesla, you could say, you know, when this tight day or this tight day happened, down to the next 12 hours, you were like, you got to get in this thing, because if this thing's going to go, you know, it's going to go. But this is one of the more visible flags. Most companies don't flag that way because they're not as memey. Like, not everyone's eyes are on it. So Hims is more in that category where, you know, it might go here, it might go here, it might go here, you know, could undercut and you might get chopped out. I'm just being honest with you. This is how swing trading works. You get chopped out, you know, 4, 5, 6 times, maybe 7 times. And then one of these stocks that you get in, whether it's Hims, whether it's PDD, the one I just talked about, you get in and, you know, it doesn't go down. It goes maybe just sideways or it goes up. And then you don't have to worry about your position. You don't have to look at your phone. You don't have to look at your computer. It can even go down a little bit. Suddenly you're up 10%. You know, you're up 10%. Well, it's actually 5%, but, you know, you hold, maybe you're up 8, 9%. You sell half. Maybe it goes down some more. And then it just rockets. And you've paid for all of those 7 losses on 7 other swing trades. Sorry, I just really don't want all these lines on my chart. But I think they were somewhat instructive, at least. That's kind of the name of the game, and the only reason I draw it out like that is because it's just more honest than saying that every single stock that you watch a video of on YouTube that the YouTuber says is about to break out, in his opinion, talking in the third person now, is going to break out, okay? So that's the levels, 58 and 55. That's kind of what can happen. And don't get me wrong, I've looked at a lot of companies to come up with this sort of list here that we have going on. There's other names that, you know, ALB is another name that might pull back more. You can see it's more extended, just as an example before it goes. but there's a lot of companies that don't look like HIMS, that don't look like ALB, that, you know, I wouldn't even talk about getting. You don't want to get in Google right now. You don't want to get in Broadcom. Right? That looks horrible. You don't want to get in GE because it moves 2% a day, right? You don't want to get in IBM. You don't want to get in Uber and Shopify are okay, but there are definitely a lot of companies, Qualcomm, like, I don't know, what are you going to buy this off this line and watch your phone the next day? So I have put a lot of care into saying, you know, a lot of these companies are not worth looking at. This one is worth looking at. And all that to say, back to people who like to hear about the news, did fall 8% before that 30% drop. There was some sort of, you know, this is not really stuff that typically a business would talk about unless you're, you know, that's sort of your personality or your Elon or whoever. You talk about any topic, but even Elon stays away from most sort of difficult topics. Here's another drop. This is on actually resolving the shortage and Novo's and Hims partnered medication, which dropped their stock because they're selling these. So, you know, the whole supply demand thing. And then, yeah, we've talked about this. This is sort of FTC, FDA related. But they're back, you know. This is in April, so that was the collaboration. In June, there was some reasons to end it. And this is the response. I talked about the CEO actually striking back a little bit and, you know, being the voice of the people in it as well as he could. So all of that tended to make Hims turn up in a good way. These sort of regulatory issues seem to be simmering down. We don't know exactly what's going to happen. This whole shortage of semaglutide, which is Ozempic, doesn't seem to be mattering for Hims, although it complicated their position in the market, right? Because they were selling a GLP-1 drug. Fine. All we really need to know is that things are fine. They're not exactly partners as they were, but somehow there's a lot of buying in this stock. We tried to break out once. This bounce was insane. This bounce back was not entirely unexpected. I know people were shorting down here. Didn't quite make it. Earnings was poor. Okay. But still, this stock just can't die. And so when you see a stock get hammered with news like its earnings was hammered with a ceasing of a partnership with a huge pharmaceutical company, and it just still holds up there, and the weekly chart looks like a massive flag, that's the argument for Hims. We talked about places to get in, and I'm not, you know, haven't talked with the CEO, but whatever the heck he's doing, and, you know, his statement here about being basically the voice of the people, it seems to be enough. It certainly was well received by people on X, which seems like kind of a joke to say that aloud, but there are a lot of investors of all sizes on that platform. So it's very free speechy, but you can't lie. This chart looks great. So I'll shut up now. Talked about the entries, talked about the lines, 58, 55, and you can see the volume sort of trailing off, which is actually a sign that it's bullish, given that if there were a lot of volume, it would indicate a lot of selling, like right here. Well, this is actually a green candle, so it's a bad example, but see all the selling here. This is obviously not buying because it went down. So as the volume trails off, indicates, yeah, maybe not a lot of people are buying, but there's definitely not very many people selling. So it's sort of a price agreement, at which point the price has to choose a direction, and it's more likely going to go up because there's higher lows here. So if you like these sort of stock ideas coupled with some charts to say, what is the price actually telling us, along with what is this company, what are the risks, what is the CEO saying that's helping calm the risks, head over to stockcommunity.com, stocks community with an S. Try it out for $25 for 7 days. Hop in there and you'll actually see some folks in there. There are some testimonials already. You can see that right there and right here. If you want to pause the video and take a look at that. And if you haven't hit that subscribe button, I will see you in the next one if you hit it.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
Let's get back to some hymns here. Oh no, Chris Sane, sorry. Talking about him so much.
Move in sync with each other. Okay, they're called cousins. All right, now what else Coach got for you? Bitcoin. All right, listen. While it's sleeping, so you got to remember this for me, guys. Things will pop, then things will cool off. Look, it'll pop. That means it's running, okay? Then it will cool off. This is a cool off period. 109. When you see 109, I need you to do like this for me, okay? Like, yep. What is my price target? Everybody write this down, man, because when it happened and when you see me celebrate you guys, I want y'all to be like, yep, he called this well in advance. Before everybody, before the suits on Wall Street, before anybody on social media. I'm telling you this because I do this, guys, okay? Put 150, 200K, 300K. So I don't care nothing about 112, 109. I wanted to go to 80 because I already know the destination of where it's a technical thing. It ain't me. It's a technical thing, okay? Learn your charts, change your life, okay? Listen, man. Everybody,
if you guys are watching on X, head over to YouTube.
Join the money team, because guess what? The money team.
Because you can ask questions on YouTube and I'll see them.
Listen, man. We make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result, and very few consider the journey. So do me a favor. Make sure you like, subscribe, grab some free stocks using my link below, and I'll catch you guys in the next one. All right. Peace.
All right, let's listen to some Felix.
Fools just called Shopify the next Amazon, predicting a 200x return. But here is what they're not telling you. I'm going to show you exactly how to analyze whether Shopify is actually worth your money using the same methods Wall Street's pros use. Because let's face it, most retail investors are gambling. They're not actually investing. They chase headlines and hype, but they don't understand what makes a company truly valuable. So you get burned when the bubble bursts. So today I'll teach you how to spot a real winner from overhyped losers. So by the end of this video, you'll know how to evaluate this and any tech stock like a professional, whether Shopify's valuation makes sense, and why the e-commerce revolution is actually just getting started. But there's some red flags here that could derail Shopify's growth. My name is Felix Pring. That's Winston back there, who's really the smart cookie around here. And I used to be an investment banker and now the founder of Code Academy, where we've taught over 20,000 retail investors already. I'm also the co-founder of Trade Vision, where we give you access to data that most people don't even know exists. Now, before we analyze any stock, we need to understand the ocean it's swimming in. Shopify is an e-commerce giant. So you go into Trade Vision, you type here in the top, e-commerce, and undoubtedly you're going to find some sort of ETF, Global X e-commerce, that'll do, and that'll tell you where this is going. And what you see, well, you see a chart that is very, very much in an up. And that's a good thing. E-commerce is exploding. The global e-commerce market is projected to reach 7.4 trillion. Yeah, trillion this year. That's up from only 4 trillion 5 years ago. COVID moved this whole process ahead by about 5 to 7 years. But if you think this is a lot, well, have a look at the global shopping pie. The global shopping pie looks like this. And e-commerce is just that little slither. 15% of global shopping is online. So that's your first lesson. Always start with the addressable market. Start with the industry. So here are a couple of facts you might want to write down about Shopify. They power 1.7 million online shops. They have a 28% US market share. They're growing faster than the overall market, so they're clearly better than your average e-commerce business. And people keep comparing it against Amazon, and it irritates me. And I tell you why. Amazon is essentially a marketplace. Yes, I get there are also some other businesses within that, but let's just focus on the e-commerce business. Shopify enables companies to run their own business. So what does that mean? Well, Amazon keeps all the data, whereas with Shopify, their customer actually gets the data. So you can sell like 1 million books on Amazon, you don't know a single one of your customers, which is a problem if you're trying to build a business. Now, before I take you deeper, I want to take you to a level that is far beyond what we can cover in a short video like this on YouTube. I want to actually teach you how does Wall Street spot winners again and again and again, because they don't wake up in the morning and go, ooh, I like this stock, it's called Shopify, let's look into it. No, they have a process. And that process is very, very simple, so it can be taught to new employees and it can be repeated again and again and again. I want to teach you that process. But it'll take me probably an hour, maybe even 2. If you want to join me to learn that for free, join me at felixschwenz.org/training this week. There's a link down below. You can subscribe to that. You can get yourself a free seat and you will walk away with a real skill. But let's get back to Shopify and actually understanding what is the business? Where is the money coming from? So they have a pie. My pies are interesting looking, right? Which is about 2.6 billion in the last quarter. Now, about 1/5 of that is subscription revenue. Now, subscription revenue is a beautiful thing because it's recurring. The rest of that is what they call merchant solutions. Now, what the heck are merchant solutions? Basically, transaction fees. So every time you sell something on there, you got to pay them something. And the whole thing is growing at 31% year over year. So it's the...
Okay, 30% is a lot, but let's talk about a company that is growing even faster than that. I think you've heard of it. It is the title of this video. Don't know where this text came from, but we can get rid of it. And yeah, if you have any questions, go ahead and drop those in the YouTube. Like Christian was talking over there about PDD. And let's talk about Nvidia because the chart looks absolutely crazy. So here we go. There's one stock that is about to go up a lot, in my opinion. It's been going sideways for 3 months, and it's the biggest stock in the world, $4 trillion market cap, Nvidia, NVDA. Now is the time. I could have made a video in the past 2 months. Last month I didn't. I made it today. And let's take a look at why this stock looks like it's ready to go up and what they've got cooking, including their recent partnership that's been all over the news with OpenAI.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So here is the chart, and if you zoom out on a weekly basis, yes, we did go sideways for about an entire year here, but right now we look like we're ready to break new highs. We don't always go sideways for a year. If we go back here we went sideways for about 2 months, okay? Yes, this was about 9 months. Now is the time to enter Nvidia, in my opinion. You have a pretty good down move followed by an up move, down move followed by a change of character up. You could say, oh, well, you draw a line there and it failed to break out. It's like, fine. Well, it held a higher low here, held a higher low here. And the way that we invest, you lose here, you stop out for $1 change. You know, you do that. Maybe you did that twice. Maybe you bought down here because you have some special vision, some foresight about what's going to happen. Fine, you've lost twice. All you need to do is get in at one time where you make $10, $20, $30 a share, and you more than make up for those little chop outs. You can see here, I got chopped out here, and then I got in here, and I got into a time where, I sold pretty early, as you can see, but, you get chopped out, and then you get in at the right time. So for everyone who's super tired of the charts, I don't blame you. Let's talk a little bit about what Nvidia is up to. We're not really going to talk about what they do because everyone knows that they're the GPU juggernaut. This is the recent news, though. They committed, I like that verb, $100 billion to OpenAI, because OpenAI is then going to lease GPUs from Nvidia. I think that's the right word, lease them. I don't know that they're going to buy them because they're probably going to use them through Oracle's servers. So all this to say, you would say that it's a, circle of money, sort of a I scratch your back, you scratch mine, except people are getting paid and they do have a product that's getting used, at least. I mean, I'm literally using the product right now that Nvidia invested in. So, it's not totally financial engineering. In terms of risks, I don't think we have to worry about antitrust in the next week. Okay. Yes, these are massive numbers that can raise some eyebrows, but in the current administration, it's very business friendly, right? So, and when we're talking about investing, we're talking about getting in for, 3 to 5 days. You get maybe 5 to 10%, you sell some out, and then you keep a little more. And if it goes down, you sell more. But if you want to hold on, maybe you sell up here, or you sell over here. So that's the name of the game. There have been other times as well where, here, I did buy here and I held for quite a lot, 20% or more. This is an ad. These are my first sells up here. This is another ad, actually, for being totally accurate. But the point is, you can see it's not like I'm just buying and then letting it go down on me and then holding, and then suddenly I sell and I made a bunch of money and I knew all along that Nvidia was going to come up. That's not what I do here. That's not what people who watch this channel do. We're not bag holders, or if we are, we were recovering. So, back to a little bit about what's going to come up for Nvidia. Maybe they're a monopoly. Maybe OpenAI is the monopoly. Maybe there's not a lot of rivals. Maybe they're what is the word? The opposite of monopoly. It's like a simopoly, where they are the only buyer of power, for example, for some of these huge new AI-friendly power generators, data center creators. Talking about companies like, I don't know, CIFR, IREN, GEV, VST are the power generators. It's good to watch those tickers, and we can keep an eye on them just in general for general Nvidia hygiene. They mostly look pretty good. They look kind of like in a similar theme to Nvidia based on just what they look like visually here. Iron's pulling back a little bit at some point. I mean, it did have another big day today, but this is the biggest one, obviously, and the biggest one is also the safest. And it doesn't move as slow as some huge companies like, GE or even Boeing. So that's the chart. The levels are pretty clearly 185 is the all-time high. So that would be the level to break through or to test. And then you can risk pretty much where we're at right now. Maybe 180 is a whole dollar level. But I wouldn't get too worried about what exactly you're risking. Something like 182 if it breaks apart. Now, to satisfy folks who are still more interested in what exactly they're invested in, or if you don't use charts, we saw what happened to Intel when they were the recipient of this $5 billion right after the government just took this stake. Turns out Nvidia gets 4% of Intel immediately, and I guess they'll be able to offer Intel's servers based on Intel's architecture, Nvidia's Blackwell GPUs. It's basically a way to keep Intel alive. I mean, it could be a distraction just to make it look like Nvidia has competition. It doesn't really matter what exactly it was. What it shows is that Nvidia still has the Midas touch, because this is where we learned the government had taken a stake. And yeah, we did get a pop on the Nvidia investment, but we also got a follow-up pop. So the government taking a stake was relatively minor. It's like 20%. Certainly seemed like a lot at the time. But this is how Nvidia works. It's 50%. So it's like 20%, 2 times, 3 times, 20% more powerful a force than even the government. So, I'm laughing just because this is so scary, but also pretty awesome as an investor if you're on the right side of the move. Now, a couple challenges. The government could say, hey, no more. This is the Chinese government I'm talking about. No more partnership with Nvidia at all. And if they don't work on Intel, components that go into Nvidia's chips, well, that could be a problem for Nvidia. And even though Nvidia has made pains to comply, there's that. And then there is the new H-1B thing, but Amazon has 10,000 H-1B workers. Nvidia has fewer than that, so I don't think it's as big a deal for Nvidia. And then as far as, valuation rounds and all that, I don't think there's really that much alpha here, except to say, is there going to be some sort of scrutiny around Intel taking stakes in so many different companies? This revenue is insane. Graphics is actually pretty big. This is sort of the OG, Intel got so big because of the gaming, but data center division is about half of all revenue. And I suppose the other 50% is, a lot of it is probably selling GPUs to other companies that use them in their own data centers. So it's all pretty much data centers. Do you think these unnamed companies are kind of obvious? I mean, it's got to be like Meta and, Amazon or something. OpenAI, Meta, yeah. XAI takes huge shipments as well. Elon's company. So, it's a problem, I guess, that you only have 4 customers, and sometimes your customers invest, sometimes you invest in your customers and then they pay you. So it's very incestual, but when the customers that you have are the biggest companies in the world, it's not really a problem that you only have, a few. So all this to say, it's Nvidia, everyone still loves it. Sure, if there's export restrictions and they can't deal with China anymore, I think other companies in the semi space are going to have that challenge as well. So that's more particular. We'll see that in the market. Maybe we'll see that with the semi ETF, SOXL. But Nvidia looks great. AMD actually looks solid too. Is a good risk level to jump into. Some of these other companies, Broadcom, not great. And then little semi companies, CRDO, LRCX, you could get in, but it's just not as long a base. This is just safer because you can get in here and it looks like eventually this is going to go. It could go down a little bit, go back up and then go, but it's been going sideways for a while and went down on Q2 earnings like a lot of companies went down on Q2 earnings. Not so bad as the Trade Desk, an example of a company that really went down on Q2 earnings. But a lot of these companies that dropped on Q2 earnings eventually bounced. Netflix sort of recovered. Spotify did recover. And then Shopify actually went up and held. Some of these companies, Meta went up and held. Reddit was the best earnings story of all of them in Q2. And you could say this is the best stock to buy right now. But, of course, when a company is so extended, 50% from this 200-day moving average, which is the moving average that everyone watches, goes all the way back to this big line here, all these buyers. You can see all this volume sort of near this moving average. It makes you more interested in a company that's a little less extended from a moving average, only 30%. So that's sort of the technical reason. Those are some other companies that might be on the radar of other investors. And this is why Nvidia's super interesting right now, even though if you zoom way in on a 3-month chart, it looks like a chop fest. You can risk $1 or $2. Maybe you risk this level. You look for a lot of volume at a certain day, and then you pick that day and to pick the high, and maybe you risk that number because when you look out, there's going to be a lot of people who own because they bought it on that day. That's why there's all that volume. You can see all the volume at that level. So you sell if it goes below there, and you hold if it bounces off there and goes up, or if it just straight goes up, you just hold. Make 10, make $20 a share. Maybe you lose $1 if you get chopped out like I did over here, which happens all the time, okay? That's a stock. That's the chart. That's a little bit about the fundamentals. If you like this sort of talk, head over to stockscommunity.com. Try it out for $25 for 7 days. See if you like it. It's a Discord. It's the same thing Wall Street Bets used. There's a lot of Discord is the biggest community platform. If you haven't heard of it, it's pretty good at all sorts of communities. So try it out. Head over there. And if you haven't hit that subscribe button, hit that so you get notified of the next video. I'll see you in the next one.
This is Sam Putnam.
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 All right, let's jump into a little bit of Felix. Let's see what he's up to here.
Motley Fool crowd right yet? Well, let me know what you think so far. We're going to come to a conclusion here. So the 500 million baseline provides them a nice little stability. And then the transaction-based revenue scales with customer success. So it's kind of like an upsell, really. The more successful their customers, the more money they make. Now, here's what's important about any business. How big is your moat? How deep is your love, or how deep is your moat? You get that musical reference? Put it in the comments down below because your mind is as weird as mine. Morningstar has upgraded Shopify's moat to wide. What does that mean? It means it's hard for someone to come in and steal their customers. I'll tell you why. They have an app ecosystem. There are 8,000 apps in the Shopify App Store. Those 8,000 apps bring in over $1 billion for the developers. And that creates a switching cost for merchants. because merchants do not like rebuilding apps. So who are some of their competitors? Well, there is WooCommerce, and if we're honest about it, Shopify wipes the floor with WooCommerce. It's just more customizable. There is also things like Square. There is Big Commerce. I should write in capitals, right? Otherwise you can't read a thing. And they have better developer ecosystems than most. Now, there are some weaknesses here. They're a little bit more expensive, higher cost, but it's a better product. And, well, Amazon is bigger. And there are others in the space, Squarespace, Wix, and others who are trying to get in on that. But before we get too excited about this,
Just reading some of those YouTube comments
so far,
about
you can see
Nvidia.
why there is something good about this company, but the massive, explosive growth, I'm not seeing it yet. How much money are these guys making? Well, their gross margin, which is the key number to look at for any business, because it tells you how much pricing power do they have? It's 51%. That's okay. For SaaS, it's not amazing, but it's pretty good. They have their cash flow positive, so that's a good thing. Relatively low debt levels. They're somewhat investing in the future. But here is what actually got me genuinely excited about Shopify. There is a massive untapped opportunity. Only 30% of their money is coming from international, the foreign buggers like me. 70% of their business is coming from North America,
The semi-ETF.
which, let's face it, is going to be mostly the US. So there is a huge opportunity here in Europe and in Asia. But let's also be brutally honest about this one, because there are some risks here. They're trading at somewhere like 8 to 12 times revenue, depending on what the stock prices are of the morning. Growth is slower than during COVID, and there is more competition. And it is easier than ever to build software thanks to AI. So what about that 280x return, which is probably why you clicked on the video? Honestly, the maths says we're not seeing that. It would require Shopify to become larger than Amazon. And there will be more competitors in here. The market is going to get somewhat saturated. So if Shopify really accelerates its growth, Amazon is going to put out similar tools. Google or Meta might jump on board and do the same thing. And that'll mean higher acquisition cost of customers. So let's just summarize what we learned here. It's a good company, but how does this research actually work? The first step is always zoom the heck out and look at the industry. The industry looks good. It's growing nicely. We looked at the sector chart. That looks good. And that basically tells you also, and this is maybe point number 2, what is the total addressable market, right? Write this down. This is good stuff. The third is how money, as in how do they generate money? You need to understand that. If you can't understand that, the business is probably too complicated and too high risk. We understand that. They charge you a fee to be selling something on there, and then they charge you a fee every time you sell something, and that seems to work pretty well. And then number 4, you want to look at growth. And ideally, you want your growth to be greater than the general market. And that is the case here. So it's a good business. And then number 5, you want to round it off with, do they have cash? Right? Are they generating cash? And what does the debt look like? And on both of those counts, they're looking pretty good. So what could horribly go wrong? Competition. I think it's a good business. I think it's actually a great business. And if I look at it, I think what they've done, they've actually taken the playbook from some of the truly great e-commerce businesses you see in Asia, and they've nicked some of their cool features. And they've implemented those. So they're kind of more agile, they're more ahead, better features. Their customers seem to absolutely love it. So I think it's a solid investment. It doesn't mean you should run out and buy it. I don't think it's going to 280x, but I think it's going to do well. So I would never have more than, say, 5% in a stock like this as an initial investment. Now, if the stock goes up 10x, I'm not suggesting you sell it. I'm just saying, as a beginning, that would be kind of the most I could put into it. But really what I'd encourage you to do is, instead of clicking on YouTube videos that say 280x on the cover, like this one here, and obviously I'm irritating 99% of the audience now, but that's sort of what I do, learn how to actually come to your own conclusion. And it's much, much simpler than you think. And I've given you a lot of value here in 10, 15 minutes, but we would need probably an hour or an hour and a half for me to really get into what is the proper process for finding winning stocks. Now, I like the way the chart looks. I like the setup right here as I'm recording this. By the time you watch this, the chart's going to move up or down, and someone's going to go, it's too late, it's too high, it's lower now. I mean, this is how the stock market works. But this is why I always try to give you something that's actually lasting skills. So what do I see here? Well, look, you got two tops here at the same level, basically at about $157, something like that. That's your resistance. And it seems to be bottoming out around this yellow line here, which is your 50-day moving average line. It bounces off that. I like the setup. Secondly, what you could look at here in trade vision is look at the support and resistance lines. The institutions are likely to buy at 135 and they're likely to sell at 160. So there's a nice little window here for a potential 15, 20% upside. And then if you break through the 160, you're potentially a lot more upside. It's a good business. It's generating cash. It's a market that's growing very quickly. It's gotten a little bit beaten up here. So it could be the entry point we've all been waiting for. But you always got to come to your own conclusions and learn the process, learn the steps. Join me at felixfrenz.org/training. I'll walk you through that. And if you like a stock like this, look, add it to your watch list. As simple as this. You go in here and you'll click on, say, my news alert watch list here down there, and then I click on the plus symbol. Now it's added, and I will now automatically get news on this one on my phone pre-market when something's happening that's going to drive this stock.
Okay, let's chill on the shilling. Let's jump, although I love the analysis and especially the description of learning the process. So let's talk about this SOXL ETF. Jump into a little breakdown here. Here is the big picture. And let's see just how attractive this ETF is. So technically it is an ETF. Not a stock, but close enough. Alrighty. There is one stock that is about to explode, in my opinion. It is ticker symbol SOXL, SOXL. It represents semiconductor companies. And if you've seen Nvidia, Nvidia is at all-time highs. It's gone sideways for 3 months. And with that $100 billion investment in OpenAI, I believe Nvidia is going to break out. Now, you might think Nvidia is at all-time highs. Why would I buy it if it's at all-time highs? Fine. For that reason, here is another way to get exposure to Nvidia and other semiconductor stocks, which also look good, like AMD, for example, looks good right now. It doesn't always look good. It's through SOXL. Let's talk about it. Let's jump right in. Now, if you haven't hit that like button, hit that right now if you like stock ideas in a very timely manner.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right. Sorry for the attitude here, but I personally think Nvidia is a great buy right now. Yes, it's getting near all-time highs, but it also has gone sideways since the beginning of August. It's really only 2 months, but if we go back, it's almost been 3 months of basically sideways, which is a long time for a stock considering what the market did the last 3 months, which is just piled up. So, but I get it. I hear you if you're like, well, Nvidia earnings sort of sold off, just barely reclaimed them. I don't want to buy it. There could be overhead supply up here. Fine. For that reason, I could say, hey, check out AMD. Talk about a low risk entry, right? It's not at all-time highs. All-time highs are actually all the way back in last year, mid-summer last year. So you could say, all the way back in February of last year. all this to say, you could say, hey, I want to buy AMD. It's like, okay, fine. There's a low risk entry here, risk $1.02, whatever it is, in this sort of choppy flag. I personally think this flag is a little choppy to buy right now. So for that reason, I think it's easier to just get situated in SOXL. It's not actually a stock, okay? It's an ETF, but it trades a lot like a stock. And it sort of looks similar to CoreWeave in a way, which is also shaping up here. It is holding. It did sell off a little bit. CoreWeave is the AI data center way to play Nvidia. They have a bunch of debt. They're buying a bunch of GPUs. Their recent IPO, they're worth maybe $10-15 billion. So all these stocks have risk. This is an IPO. This is the biggest stock in the market at all-time highs. Maybe that's a risk in your eyes. For me, it's not. You know, you want to buy things that are up because they got up there for a reason. But that only applies to the best companies in the world, which Nvidia is. But the reason to buy SOXL is maybe you want a little more safety. And for that reason, fine, yeah, it is grinding up a little bit. It's in a flag type formation, you know, higher lows sort of coming to a head here where it's going to make a move and it's probably going to be the upside. That's why we have it on watch. And we have a level going back at this $35 level, which goes all the way back here. And you can see there's a little more volume there. It's kind of equally spread actually, but a lot of these people would have already sold, so this isn't even that relevant. It would be more relevant to look at it in sort of 180-day fashion, where you can see we're pretty much, there's not a lot of backholders up here, so that's even more reason to say this is a good buy. It sort of doesn't have a lot of resistance. There'll be blue skies above. Now, for people who are like, I don't want to look at charts, you just looked at charts for like 3-4 minutes, what are you doing? I get you. Okay, this is what SOXL does. Okay, they do hold Nvidia, but they also hold a lot of other semi-stocks. They hold Broadcom. It's actually a bigger holding than Nvidia. AMD's right up there, Qualcomm, Intel. Recently had that huge jump on the Nvidia investment following the government stake. Texas Instruments, you know that is like the calculator company, right? But they do more than that. Micron, MRVL, Marvel, Microchip, and LRCX. So a good way to figure out if the ETF is going to break out is to say, well, we talked about AMD and how that could go up, or at least it's a low risk entry. We talked about Nvidia. Broadcom itself, which again is the biggest holding, doesn't look great right now, okay? But it's only less than 10%, okay? As far as these other companies, Micron is holding up here, sort of a little undercut, but held this level here. LRCX, same thing, looks very similar, up a lot, but held that sort of level. And Marvel as well was on that list. Pretty similar, probably a little extended. So it's very hard to find an ETF that has all of its holdings look like they're about to break out, but sort of an aggregate, it does create a sort of flag that is representative of a bullish flag, a breakout flag, similar to this one. Okay, I keep coming back to this one because I really do think Nvidia is at a really solid spot to buy right now. But I do understand some people look for an ETF. And what this ETF does, it's a 3x bullish ETF on those those semi stocks. And the way it achieves that 3x is it daily rebalances to try to represent 3x performance on the like average percent of those. So if that sounds like I don't know what it actually does, you'd be right. Okay. What it does mean though is that if it is rebalanced daily, you can have some whipsaws. Okay, and there actually wasn't that many whipsaws in the tariff moves. I mean, it just basically followed the market, which was crazy. But just to give an example of, so a more modest move in the actual market seems sort of modest compared to the tariff move, was actually pretty severe in SOXL. So all this to say, you know, if you do see this thing gap down and have a bad day, just get out of it, okay? I don't know if that needs to be said, but it never hurts to say it. So just because it is a 3x bullish ETF which means that when the semiconductor stocks go up, this stock goes up as well. If the semi stocks go down, AVGO being the one that could go down more right away, in aggregate, this one could go down 3x as well. So maybe that goes without saying, but it never hurts to reiterate. As far as like, this is like inside baseball stuff. So there was $2 billion pulled from it, which is kind of a lot for an ETF that was only like 20 billion or 10 billion. So it's like 10%, 20% of its market cap taken right out. Compared to during that same period, less than a little more than $500 million of TQQQ was taken out, and TQQQ is 30 billion. So that's like 3% of TQQQ was taken out. Meanwhile, 20% of that SOXL semi ETF was taken out. So people are a little squirrely in terms of keeping their money in this thing, but we already looked at what it can do. Like, this is the challenge, the risk of buying it. TQQQ, just basically follows, well, it's triple the QQQ, which looks exactly like this. So why are we buying specifically semis instead of QQQ? Well, because QQQ basically follows the market, because the market is basically the Mag 7 and MAGS, the biggest FANG companies, the Meta, Apple, Nvidia. What are the other FANG companies? Amazon, Netflix. Trying to sound out all the letters. FAANG. Well, F is no longer. Now it's Mang with the M. Google, right? That's the G. You get the idea. You don't really want to own all these companies. I don't want to own Google up here, so I don't want to own Mags. I don't even necessarily want to own the market up here, but I do want to own Nvidia. And for people who don't want to own Nvidia, which, fine, SOXL is the idea. Okay? So we could go into detail about it, but we're pretty much just rehashing a dead horse here. And this $100 billion OpenAI investment, Broadcom, whatever, VMware, that sounds like virusware, whatever the word for that is, spyware, vaporware. Sorry, Broadcom. AMD, dropped a little on the Nvidia Intel investment. Intel went up a bunch. Qualcomm, great. New PC chip. I should hope so. This is what Qualcomm looks like. And Intel's actually in this ETF as well. So it does encompass Intel's gains. Qualcomm looks all right. If it holds here, then it'll look all right. This was a flag, did break out. Just yet another example of why we sell at 10% up. Because look, you sold half at 10% up. You still have half. Fine, you sell out here. Your average sell is all the way up here. You made like 7-8%. Pretty awesome. Risk 1%. Maybe you risk to right here. Even if you risk 2%. I personally am more of the idea that you should risk 1% and just have a lower win rate, but some people want to have more winning trades because it just sounds good, even though it's not mathematically optimal. Whatever you do, you. Texas Instruments, that's TXN, MU, tariffs, dividend, infrastructure, MRVO, dividend news, and that's pretty much all we have to worry about. We talked about this volatility decay where this thing can get a little bit whipsawy, and this fee is paid by the actual price of the stock, so you don't have to pay it when you buy and sell it. It's just visible in the actual movement. So if this starts to go sideways for a long period of time, meanwhile all these companies go up, Texas Instruments is kind of bottoming, although I don't like to buy bottoms. Marvel looks like this, MU looks like this, and maybe the fee is pretty high, but I don't think that we have to worry about the fee. It's like less than 1%. Doesn't matter. So to beat a dead horse, Nvidia looks great, but fine. If you want another idea, here's SOXL. There you go. If you like these ideas, you want to chat about these in a more real-time fashion, which I certainly understand. You know, you might see this video at a later time than I record it. Head over to stockscommunity.com, try it out for $25 for 7 days. Give it a shot. You know, what's $25 these days? One lobster dinner? Less than that? A lobster tail and a beer? And if you haven't hit that subscribe button, hit that button. Gets you notified of new videos as soon as they come out. I'll see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's head back and see what Felix is up to right about now.
I'm only going to get news that might actually drive the stock. So you have your...
Oh, you know what? He's about to stop talking, so we'll just head over to Corey now.
What your favorite stocks and the market is likely to do this upcoming week. And strap in, sit tight, and don't skip any part of this video because I'm going to show you a very powerful strategy that I've been using for years, teaching my Discord, and how you can gauge what is almost guaranteed to happen tomorrow morning, and you're going to be able to do it tonight. And I'm also going to show you how to gauge the economic strength of the United States against world economy and how that may affect the stock market going forward this week. This is going to be a good one. Strap in. Let's get started. And these are all strategies that I've been teaching in my Discord consistently, which is part of the reason why we are making the profits you see on the screen right here. $20,000, $30,000, $40,000, $60,000, even $100,000 per trade over the last couple of months we've been printing with these strategies I'm about to show you in this video. We're going to talk about SPY. We're going to talk about Sofi, Palantir, Nvidia, Tesla. We're going to look at CoreWeave, Navitas, and some other stocks as well as Sofi to gauge what's going on in the market. We have a lot of data coming out this week. We're also going to look at the VIX. Let's jump right in. Understanding the VIX is very important. It's part of how I gauge the market every single week, and I teach my students how to do this and how to gauge the VIX and understand exactly what's going on, which I'm also teaching you right now as well. The VIX is very important to understand because there's a lot of market data coming out. When the VIX goes up, the stock market goes down. When the VIX goes down, the market generally goes up, but it's more indicative of volatility. So anything below $18 has low volatility. We're currently at $15.29. It did spike this week up to 17. And you notice when it spikes up, the premiums on options go up. Selling and buying changes pretty quickly. And there's more indecision in the market, which is very typical. And with interest rates being cut and the things going on with the Fed and different data going out, this is normal, very normal to happen. And we can see that there's been a lot of spikes in the VIX over the past year and a half, but things are quite settled compared to where they were over the past year, almost back to the levels they were in February of 2024. So much better. But we do see that it is in a downtrend. It broke out of this downtrend. Now it's consolidating. We got data this week. It could spike a little bit higher. What I will tell you is that when you're between 15 or 13 up to 18, it's pretty steady. Anything below 18, it's very steady, a lot easier to gauge. The premiums and the options are less, but when it's between 18 and 20, there's a lot more elevated premiums, which is good. And if you understand theta and IV crush, gamma delta decay, and you understand how to run your options and sell them, puts and calls, and you do this around earnings times and catalysts while the volatility is high, you can make a lot of money doing that. I actually enjoy selling options when the volatility is between 18 and 20. Selling below 18 is less profitable. You can still make consistent income, but as an option seller, it makes more sense to sell between 18 and 20 and 20 and 25, but you also have to pick good stocks, and you have to understand technical analysis, and you have to have capital and have rules that you follow and be safe. Anything above 25 as you push 30, it's very risky. There's a lot of money to be made. So let's say we're going to sell a put option on Tesla. All right. And Tesla right now, let's say is 450 and you're going to sell like a 420. You would probably going 2 weeks out, make like $1,200 to $1,500 or more if the VIX was up here. In this range, it might be 800 and down here, it might be 400 or 500. You'll make pretty close to double up here as you will down here, but the risk is also a lot higher. So you have to understand how the VIX works. We have a lot of data coming out this coming week. We have job openings, which is going to be on the 30th, and then if we look here, the 30th is on Tuesday. Job openings on Tuesday. Manufacturing PMI is also going to be on Wednesday of this week, more data. And then, of course, we have on Friday non-farm payrolls, unemployment rate, and also services PMI. Very big week as far as data. I anticipate the market will probably open up a little jumpy tomorrow. Maybe it'll gap up. It's potentially possible. It could jump down. I'm leaning more towards a little bit more of a bullish sentiment for Monday. However, so I do believe no matter what happens tomorrow night, going into Tuesday morning, there'll be some sell-off. Manufacturing PMI is 10 a.m. Tuesday. After that data comes out, if we meet or beat the expectations, it's likely it'll just recover and the market will move up on Tuesday. But then on Thursday, we have non-farm payrolls, unemployment. So I expect Wednesday to be a pretty good day as long as data is good on Tuesday. We'll have a good day Tuesday and Wednesday most likely. But then after Wednesday, after hours, early morning Thursday, there should be some selling most likely due to this data. Once the data comes out, then if it's good, we should have a pretty good Thursday. But even if Thursday recovers and is good, going to be stagnant Thursday afternoon into Friday morning as we have services PMI. So it's going to be an up and down week if you get the picture. It's like data comes out, it's good. The market starts to recover and goes up, then gets a little shaky and sells off a bit. And that's in lieu of data coming out the following day. It's kind of like that at the beginning of the month. This is a pretty big week. We have services and manufacturing PMI. So just be aware of that. If you guys don't know, I put out a trade in my Discord for XLV back when it was 136 and it dropped to 133. We made thousands of dollars in the Discord on XLV with put options. And we also have trades that are active on CoreWeave, which we have made money on already. CoreWeave looks like it's going to consolidate this week, maybe pull back a little bit more and then run. I anticipate CoreWeave will do very well in the coming months. It is a stock that has done very, very well. Adobe is consolidating. They've had some good news recently, and we're waiting on more updated news with Adobe in their AI play and what they plan on doing going forward. Their most recent earnings was actually quite good. Guidance was okay. It was kind of shaky here and there, but overall pretty good. And that's why Adobe is holding pretty strong. I also put out trades in the Discord on Southwest Airlines, LUV, and we are looking to make some good money on that with earnings coming up. We also made money on Tempest AI. I have students that made $20,000 in a day, $25,000 to be exact. When I put the trade out back here, it ran, we made money, it dropped back down, and this is the reason why I told my students to exit here. We made a lot of money on Tempest. Tempest looks like it's poised to have a very decent run through the year based on analytics of the stock and the news, although there was a sell-off due to the most recent fear-mongering due to the feds and particularly Jerome Powell saying some very bizarre things. Bank of America's earnings are also coming up, another stock that is very strong, cyclical and financial stock, and kind of tracks along with JP Morgan, Wells Fargo, and other financial and cyclical stocks. This is a stock that's likely to do well. They beat every earnings. They crush every time. They have dividends. So I anticipate a very strong earnings for Bank of America. Meta has been selling off a little bit lately, but that's normal. Stocks pull back when they're on their all-time highs or they're running consistently. The stock's been running. It's going to pull back. Most likely it's going to settle into the 720 range, 710 range, and then it'll make its next trek upwards. It could do it sooner than that, but it looks like it's at least going to sit in the 730, 725 range before it moves. We also are understanding that this is affected by Jerome Powell speaking and talking about the tech sector, but this stock, based on dark pool data, is very likely to run. In fact, dark pool data is showing me the stock could push 760 to 780 in the next couple of weeks, and by end of year could very well push into the 800 range, but we shall see what happens there. As far as dividends, typically stocks sell off after dividends, and we can see that it's done that. So after this settles down in the next week or two, maybe sooner, it will likely run. Oracle's another one. We made bank. I put out the Oracle trade back here and another one back here. It ran. We made a lot of money. Oracle pulled back again. Tech sector did pull back because of Jerome.
Okay. Yeah, Oracle did pull back on that Nvidia OpenAI partnership news. That was actually pretty similarly timed. This was the day, 22nd, I believe, was the $100 billion investment. And then Oracle sort of sold off soon after, even though Nvidia held. So I guess that Nvidia OpenAI partnership was not as beneficial for Oracle. It might not all be spent on Oracle servers. I don't know. Not here to speculate, here to talk about a company that looks poised to offer good entry. That's a Rocket Lab. Let's jump into a little breakdown on this one right here. If you are on X, head over to YouTube. You can join us there. We're talking about Nvidia. Someone was asking if Nvidia is okay to buy at all-time highs, which I think it is, but I would understand if someone doesn't want to buy a stock that's at all-time highs. That's sort of understandable, even though I think it's not logical in the case of Rocket Lab. Excuse me, Nvidia. So let's talk about Rocket Lab. There's one stock that is poised to rocket upwards. It's Rocket Lab, RKLB. They are at a recent sideways pivot level. There's no way to invest in SpaceX. They are the way to invest in rockets that's publicly traded, unless you want to jump into LUNR, which has not been as explosive as Rocket Lab. We can look at the chart to show you what I'm talking about. But if you like looking at charts, we'll do that. I'm also going to talk about recent catalysts, government contracts, as well as potential dilution. In other words, if the company sells shares out into the market, that could lower the share price because there's more supply of shares available. Helps them raise money, but at the same time, we want them to succeed, but we want them to succeed and also for us to make money in the short term. So that's what we do as stock investors. And if you haven't hit that like button yet, hit that right now and we'll get started.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
Couple Discord testimonials as well here. This is the first one on this side, and here is the other one right here. Take a look at that, pause the video, see if those type of gains seem achievable for you. They could be. I don't know your background, but it never hurts to be around a group of people who are working hard every day at identifying the best plays. Let's jump into the chart of Rocket Lab. Here we go. This is the chart, okay? It is bouncing off this moving average and sort of been just chopping like a crazy POS. I mean, when this thing runs, it really does run back in November of 24 and then in June of 25 this year. And when we really zoom out, we can see it hasn't really done much since all the way back in 2021 when it was sort of at its apex, like a lot of these technology companies before the wind got sucked out of those sails. So here's the deal. Do you want to buy this just to get chopped around? Well, you know, as long as you're not buying right at a point like that, you know, which you kind of already had that, it seems all right. You get chopped around for a couple weeks and then get a move like whatever that is, 40, 50, 60, 70%. What's wrong with that? So I know people don't like how choppy it is, but when you're able to buy at a moving average, and you might be like, well, who cares about a moving average? It's like, well, look how it did go a little below it, undercut there, but undercut there. Here it's holding that moving average. So it's a good sign, okay? Even though this is a lower low, I guess you could say this is still a higher low. So did have a little false breakout here, another false breakout. So is this the best time to get in it? I don't know. I think it's an okay time. I think it's a pretty good time. I think if I had made this video a week ago, you know, kind of would have been the same outcome. At some point, this thing is going to go. It's been going sideways for almost 2.5, 3 months. And if you can buy at a moving average, what it does for you is you might not be like Nvidia where, you know, maybe you're already in this, but this is a great opportunity. We can clearly see why. I mean, we have a line going up, we have a line going sideways. Eventually this is going to get to a point where it's like, you know, the days are super compressed. It's like, is this going up? Because If it is, now's the time. This isn't quite like Rocket Lab. Rocket Lab's more like you're getting at kind of a spot where you're looking for a move kind of like this, where you get in here, whoops, you know, you might get stopped out, you might not, depending on your risk. You get in here, you give it a second shot, and then whoa, it just never looks back. And suddenly you made $20 a share and you risked $1, and sure, you lost $1 a share here, but you still made $29 a share, right? So that's the math. That's why you can risk $1 a share here, and that's worth getting in my opinion. If you don't like charts so much, you say, hey, what is this company doing? Well, they launched satellites, okay? And this is the company, okay? Rocket Lab, recent news. You can't buy SpaceX again unless you buy this holding company, which has not been a good investment, right? There's been a lot of shares being sold, or holders after who got their lockups unlocked up, so they're able to sell their shares. Who knows exactly why that's going down, but the point is, I think it's pretty undeniable. You don't want to buy this sort of diluted form of SpaceX. This holding company doesn't just hold SpaceX. Why not own an actual publicly traded company, ticker RKLB? It's just the best you can do, unless you know someone who owns SpaceX shares and has employee shares, or can do some type of off-market transaction for you. So here's the deal. 3.5 years was short, apparently. They delivered 2 spacecraft for NASA, and they're in the same, you know, SpaceX Geo, Austin, Texas. Okay, Texas is Tesla headquarters, of course. Blah, 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 blah. There has been some insider selling, but that was only, you know, let's see, just recently. Doesn't seem to be a big deal. 1 million shares, when you look at the actual shares traded per day, this is over 100 million shares a day, so it's just not material. Now, sometimes these share sales are automatic as well, so they're pre-planned. And then if you look at some similar tickers, okay, Lunar Space is the Virgin Galactic one. Those are the main ones, okay? So let's take a look at Lunar, sort of holding in there. Kind of hard to buy this after it's just basically, let's just ignore this euphoric day and say this has not really done anything interesting in the last year and a half. So it's hard to think this is worth buying. And then Virgin Galactic, even worse. Okay, so Rocket Lab's obviously the one to buy, and then the question becomes, you know, with its peers not doing great, is it okay to buy? And it's like, well, it appears to not have any correlation to its peers. This is April, Lunar did go up, and then June down a little bit. So, I mean, Rocket Lab just kept going up even as Lunar was going down. So it's better just not look at the other peers, even though I know it's helpful to know that there are peers. It means it's a healthy market theme. They did get about $500 million from the U.S. Space Force. I don't know how that's different than NASA, but this was early 2024. That's a big number. And also mid-2024, $40 billion in contracts. Let's look at exactly what that means. I think Rocket Lab got a tiny piece of this $40 billion. They were listed as one of the companies. That would make more sense. They did test their engine. Did have a 70% revenue increase. So this is all 2024. So this is basically a lot of this and leading up to this initial run. I mean, the initial run really kicked off with earnings, so November. But I guess when you have earnings that are a 71% revenue increase, yeah, you can expect quite a run. This is sort of the worries about some of these companies, is dilution, like DXYZ we were talking about. So this actually did make the stock go down a little bit when this was announced just this month, but it's getting bought right back up. don't really need to be looking at a weekly chart anymore. This is actually makes more sense and is actually sort of calming to know that some of this downward move was based on that ATM announcement. So if we look at kind of when that got announced in September 15th, just about, that makes a ton of sense. So this sold off. So even though these lows are a little lower, now we kind of know why. Okay, they announced an ATM, which, fine, we know they're going to sell shares, but the timing of that announcement definitely created this sort of chart pattern, which is not as beautiful as a chart pattern like Nvidia's, okay, which looks like what we'd expect to see. So that's actually quite reassuring to sort of get that timing nailed down. And then other than that, I mean, these are sort of ongoing challenges, so that's not going to be a problem for us when we're just looking for 3 to 5 day bursts at a minimum to sell a third to half of our position. Of course, Rocket Lab is dependent on the market, and oil prices could impact aerospace, but I don't think that linkage is too definite. We can actually specifically look at crude is down today and sort of up the last 4 days. We've saw that. I was actually talking about Chevron, but money was rotating into oil, and it sort of seemed like into China stocks as well. But since then, only the China stocks have sort of held that gains. PTD was the poster child of that I think is going to break out. So I don't think the oil stocks are really that worth looking at. But in terms of correlation, at least to Rocket Lab, let's say from August 19th to September 3rd, if we look at Rocket Lab, August 19th to September 3rd, there is some correlation, okay? At least it appears like it. We could check again from late mid-July down to August 18th. I'm not sure exactly, but yeah, it's just spurious, specious. I wouldn't, this move is not represented in the Rocket Lab chart. So I can't really worry about that too much. The dilution, yeah, is something to worry about as a long, but besides that, we don't have to dive too deep into what exactly this company does, what its privately traded tickers, privately traded competitors, they would not be tickers, would they? So all we really have to say is, look, risk $1, risk below this moving average, risk this moving average, make 5, make 10, maybe it does this, maybe it comes back down, maybe you get stopped out, maybe you don't, maybe it eventually goes, maybe it goes sideways, you can see it's kind of messy, but I do think now is a very low risk time to get in. It's not like the euphoric time where everyone's going to be talking about it, but we don't do that, okay? If I wanted to do that, I would tell you to buy Etsy, which just went up a bunch, or I would tell you to buy Shopify, which went up on an OpenAI partnership, or I would tell you to buy, QURE might actually go up more on the Huntington's disease, but BKKT just went up a ton. Like, we're not trying to give you stocks that already went up. We're trying to get you ones that get in at low risk entries. And if you like these sort of ideas, if you want to talk in a Discord is what it's called. It's like Facebook groups, if you haven't heard of it, but it's a little more chronological. So it's like a forum. If you've heard of like web forums or email lists, just trying to reach a broad audience here. Head over to stockscommunity.com. You can try it out for $25 for 7 days. See if it's for you. $25. What is that? Like movie for a couple people? Maybe a popcorn, probably not. Give it a shot. See if it's monetarily valuable for you. And if you haven't hit that subscribe button, hit that down below. You'll get notified when these new videos come out. As soon as they come out, these testimonials are evidence of what we're doing here. And I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's head over to a little bit of Chris Sane, I believe, would be nice. Just had a new video out, so excited to see what he's up to. Pretty motivating. and pretty stoked on that sort of Main Street, Wall Street analogy he's been talking about, where when things are good on Wall Street, they might be bad on Main Street, and sort of vice versa. It's sort of a little sickening when you think about it, but it is what it is. So let's jump into that. Let's see what he's up to. Alright guys, Chris saying,
Got a special one you don't want to miss. Make sure you watch this all the way through. This video is sponsored by Moomoo. In today's video, I want to show you how to use AI on your investment journey. Do me a favor, everybody, open up your Moomoo app. When you open up
partnership
your app,
ad right now, I guess.
At the top of your screen, towards the far right, you will see an AI bot. Hit this chat bot for me and follow along. Once you hit this, you are going to get this prompt from Moomoo AI. Hi, I'm Moomoo AI. So then you will have several already built-in prompts that it will give you. And guys, watch how this is a game changer. How does cryptocurrency market volatility affect related stocks? How about this one? How does the chip localization policy affect the semiconductor? Let's go down here and put in some questions we might have. What about the government shutdown? And see if we can get some information from AI on what we could do related to this. Okay, check this out. It is analyzing your data. Guys, you can be using this on your journey, whether you are researching stocks, going through earnings reports, seeing how the fundamentals of a company is doing. Check this out. It appears you are inquiring about the U.S. government shutdown, a scenario where Congress fails to pass or extend funding legislation leading to the partial closure of federal agencies. Here's a concise overview. Check out the key points. Number 1, potential causes. A shutdown occurs if Congress doesn't approve an annual appropriations bill or temporary funding measure. Political disagreements over spending priorities or policy riders often triggers delays. Market implications is number 2. Guys, this is vital and pertinent information on your journey if you want to be a serious investor, if you want to be a serious trader. Guys, there's no AI tools in your platforms that is doing what Moomoo is doing. This is why I want you to use the description below to make sure you download the app. Market implications. You're going to have short-term volatility if the government shuts down. Markets may react to uncertainty, particularly in sectors reliant on government services such as defense and healthcare. Make a note of that. Make a note of that, okay? Economics effects. The GDP growth may dip temporarily due to halted federal spending and furloughed workers. Critical services such as air traffic control, law enforcement typically continue, but non-essential operations pause. Investor considerations. You guys need to monitor the progress in congressional negotiations for resolution and timelines. And this is why I always say, do your due diligence, be patient, don't guess, react. Guys, if you haven't downloaded the Moomoo app, please make sure you do so. This is the life-changing information that you have right at the fingertips of your mobile device. Get this using the description below. I'll catch you guys in the next one.
All right.
Okay, guys, a few things that Coach needs on your radar, okay? I got 3 hot ones right off the press, okay? If you made money today at all with Coinbase, please let me know down in the comments below. The ticker symbol is COIN. It went absolutely parabolic on the day, up $21. I want to say major salute. I know a couple people that played that one, and I want to say job well done. Okay, listen, I've been telling you guys about BMNR. I've been telling you guys about Bitcoin. All of these things are somewhat correlated, so please be mindful that a rising tide can lift all boats. That sometimes confluence occurs within some of these assets and you get outsized moves like you saw on today. Okay. Anyway, Coach is a technical expert. The chart looks extremely well on this. So look for continuation, but especially look for opportunities off a pullback. Okay. When something go up, it needs to cool off. The cool off is your time to shine. See how far it come back down. For example, let's say this come back down $10. Okay, that will put us around 323, 320-ish. That might serve as a good entry for the continued move higher. Let me know if that's understood. Okay, if you made money with coin, let me know down in the comments below. Now check this one out. I know y'all is getting busy with me in this one. This one is ticker symbol LYFT, otherwise known as Lyft, sitting at $22.93, up 4% on the day, nearly 5% if I'm keeping it a buck. Listen, guys, I can't stress it enough about you guys not only having good coaching and good guidance, having someone to put you in position to be successful consistently. Okay, we can go through our bag time and time again on some of these things, and so you guys will see that this is something that we do on a regular and on a consistent basis. But check this out. Lyft had pulled back to 21. And sometimes you guys are thinking you're missing your entries, you're missing the boat. And I keep saying you can get in at 21, 20, 19, 18, and 17. So when you see them opportunities, don't miss it. I'm trying to teach.
I don't know about Lyft and Uber right now, to be honest. I don't know. I mean, they are curling up. I mean, yeah. I don't know what to say. They are curling up. This one looks pretty extended for sure. I generally don't want to touch sort of the laggard. I think Lyft is sort of definitely the laggard. So maybe that thing will just sort of strafe to the side. Uber. This was kind of a gnarly drop. For sure. But at the same time, certainly curled up, bounced off this moving average. So, yeah. Just making sure we're in touch with what Chris Sain's talking about here, because those are definitely, widespread consumer companies. It only moves 2% a day, but super interesting. And then Netflix as well, Actually, it looks pretty gnarly. I wouldn't mess with Netflix, but Spotify has been interesting, building lows, moves a little bit faster. Shopify moves even faster and has that OpenAI news. It's definitely been exciting. I was talking about it. Frankly, I was talking about it here and then had a fake breakout. So it's an example where, you sell some, then you have to get in again. And then I don't know about getting in right now, but just sort of talking about all the bases here, all the different consumer-facing companies that are fun to talk about. Sometimes you got to talk about ones that are not as US-centric and consumer-facing like those ones, like Baidu. So let's jump into a little breakdown here. And if you do have any questions, go ahead and let me know about those. But play a little Chris Sain and then we will
teach you the power of rinsing and repeating, meaning we got it at 14 or 15. We rode it to 23. It pulled back to 21. It might from here go to 24. Then it's going to pull back to maybe 22. Then go to 26. Does that make sense? It's going to hit the target that I laid out, but it won't always go in a linear fashion. So I need you to understand, like, man, if I didn't get in this time, I can get in this time. If I missed the bus this time, I can catch the next one. It's going to come right back around. Okay. Don't chase. Don't have the fear of missing out. But more importantly, understand the opportunity that's before you guys. These plays are the steals that you want to make sure you are in so that you can get the deal of a lifetime. Okay. Listen, that's Lyft. Okay. It's not too late. $30 ain't here yet, so it ain't too late. You just make more money when you learn to perfect your entry, okay? That's the thing I want to stress about what I'm teaching you and what I'm showing you, okay? It's not that you're not going to still be successful if you bought right here, even though I've been telling you to get it since $14, $15, okay? The difference is if we are all up 40, 50, 60%, you might be up 20, 25%. And that's just simply because of where you got in at, okay? Don't think that you're still not successful. Don't think that the play still didn't work. You're just going to learn over time, man, I got to do better on a red day, the day I'm panicking, the day I'm doubting what's going on. That's the day I need to be taking action, because then you have a 4.8, nearly 5% run up. And then you feeling like, man, I should have got in. Nope. Listen to the teachings. Follow what we call in the huddle, man, and then execute the play, okay? What else Coach got for you? Guys, Uber, ticker symbol UBER. Remember I told you we're going to beat that door down. We are going to beat the door down. Now, you already know, Coach don't count nothing. Yes, we hit over $100. We hit 102. We hit 100. But you remember I told you and taught you, unless it closes at 100, I don't count it. So I'm not going to come on here and be like, our target was hit. Yes, it was hit. If you already been in it from 20 or 60, you could have sold it at 100 because it did hit. I'm talking about, look at this. This says $99.57. It was up over 1% today. And in after hours, it's at $99.58. Is that $100? $99.57 ain't 100. So I want you to say close, meaning closing price. The closing price needs to be at $100. That's how you establish new support. So right now, 100 is resistance. They're not letting it get through. We got to get to and through and then come back down. So we got to go to 102 and then come back down and close at 100. The price, when I pull these videos up and I pull these portfolios up, the price need to say 100 in after hours, not 99. Does that make sense? That's how you hit, and that's how you set up and establish a new base. That's how you establish the new. So the new support is still 95 and 90. Okay, resistance is still 100. When we get to 100 gonna become support, and 105 gonna become the new resistance. But we not there yet, but that's what's coming. That's why I gotta have you in this particular still deal, because when it happens, typically every play I call out, Netflix, Meta, the list is long and strong. They always have continuation. So I'm just stressing 100. But I've seen this movie before, guys. It ends up going all the way to 108, 112, 120. And if we can catch something like that into year end, that is going to do wonders for our overall portfolio mix, okay? So again, guys, you can play this via shares. You can play this via call options, okay? Just do me a favor. Make sure you have time on your side. 1 month. When I say time, you have to buy time. What does buy time mean, Coach? You have to buy time on your expiration date. So you should be choosing a 1 month out expiration date. So if it is about to be October 1st, at least you need your expiration to be November 15th. You can buy time by putting your expiration out 3 months. You can buy time by putting your expiration out 6 months. Does that make sense? Buy time, because you're not wrong. Oftentimes you run out of time, okay? And so I need you guys to see these little nuances, little minor tweaks you can make to your trading that's going to get you in that profitable win rate category, so that you can kind of make that transition, make that next step, especially with us going into the 100K challenge for 2026, okay? So do me that favor, keep these 3 on your radar. These will be ones that cook for you on top of other ones I have presented for you in recent videos. So again, guys, always trying to give you a mix of ways you can be successful. That's what I look to do each and every day, guys. Listen, I won't hold you long. Let's get you up out of here. We make videos like this every day. So if you like this one, make sure you check out the next one. Shout out to our sponsor of today's video. I'll catch you guys in the next one. Peace.
Okay, let's jump into a little Felix here, or invest with Corey.
PAL and some other reasons. And we got data coming out this week, so Oracle could slip down into the 275, maybe even 265 range, possibly. But it is still likely in the coming few weeks to do this number. So even if it does kind of come down like this, it's, you know, it's going to go back up this way. We're looking at a nice potential run. Oracle's likely to run into the new year and next year, and I anticipate it's going to be well into the 350, 375 range. Only time will tell. NIO, another stock that I told everybody in Discord and YouTube to buy, and a lot of people said there's no way it's going to run. And this is back when I bought it. It was $4. I bought it back here in July. I bought some way back here in March, and now look where we're at. I have thousands and thousands and thousands, like pretty close to 15,000 shares at this point between both my accounts, and have an average cost in the $4 range. So a lot of money to be made on NIO. So when you think about that, 15,000 shares and then some times almost a $4 profit. That is pretty crazy, right? So I'm up roughly about 58,000 on NIO between both accounts. Maybe a little bit off on that number, but it's roughly. We'll see where it goes tomorrow. But this is definitely a good company, in my opinion. NIO is great, and based on their sales, their growth, and their projections, definitely been a very nice run, and their market cap is up as well as the stock price. Their profits, the offering also help NIO, and their growth is good. Right now it's improving. It's not great, but it's good, and it's improving, and you can see that it's been a non-stop uptrend, not just a pump and dump. Very, very consistent. Looking at Navitas, another stock that I told everyone to start looking at when it dipped into the $5 range. I told everyone to buy here, and even more so here when it was $5.50. It ran to $7.34, almost a $2 profit per share, which is 30 something percent, like 35% in a matter of what? 2 weeks. There was 35% return in 2 weeks. You guys can see it right here. Ran all the way here in a 2-week window. Look at the profits in 2 weeks. If you were to exit, of course. I didn't exit, but I'm just saying we got in down here, and you could have got out up here. Lots of profit to be made. If you got out, congratulations. And if you're holding this stock long term, it's likely a good play with the SiC and GaN chipsets, 800 volt for the server centers and data centers for Nvidia, AMD, not to mention Meta, Microsoft, and of course, with Applied Digital renting out server space, you've got access to these server spaces. Now we need the chipsets, we need the technology, and we need 800 volts, and we need to be more efficient, and that's where Navitas comes in. Very great stock, and in my opinion, a very great stock and good investment. But remember, you don't want to put any more than 10% of your portfolio into any one stock or any one sector. You always want to be safe. Watch the stocks, watch the market, keep an eye on everything, and make sure to have risk management, follow rules, and be safe. Looking at Tesla, this stock has had one heck of a run. It's very possible this stock could hit a bunch of resistance from the previous highs up here, which is where we're at, almost in the resistance zone, or what we would call the supply zone right up here. And you want to be very careful. Anywhere between these two lines, there's going to be a lot of consolidation, selling, buying, a lot of volatility. You don't want to be caught up in the mix buying up here and then the stock drops. You want to be careful. You also don't want to miss the move, right? So that's why I always say it's better to just dollar cost average. If you buy some here and it goes up, buy more. If you buy some here and it drops, add even more. And you do this over time, and you do it safely, because it's really going to be impossible to gauge if Tesla can break this or not. With earnings coming up in 17 days, there's going to be a lot of volatility. Wouldn't be surprised if Tesla sells back into the 395 range or the 400 range. With earnings coming up and all the news, robotaxi, and of course, we've also got got to look at the Optimus robots and other things going on with Tesla. And of course, Elon Musk and Trump and just pretty much everything in the company as a whole. You never really know what's going to happen. The stock could run to 500 this week. Elon Musk says something very ignorant or very poor that people don't like, and the stock will just drop like $50, $60, $70 in a couple days. So you got to be aware of that. Tesla's very volatile. Be very safe when you are trading or looking at Tesla at all. Looking at Palantir, you want to be very cautious. This stock is very expensive now, but is likely to run, in my opinion. I was saying that this stock was going to sell off, and it did. It consolidated, but when it broke the structure right here, it pretty much gives us an indicator that there's some strength, and then it broke more structure here, and we're...
All right, let's jump into a little breakdown here. There's one stock that Cathie Wood, the famous investor who achieved 150% in 2020, just bought. The stock is Baidu, B-I-D-U, the Chinese Google. The chart looks great. There are some fundamental reasons to buy it as well, despite it being up a lot recently. And honestly, Cathie Wood, I think, got in a little bit later than she maybe intended to or ought to. But since then, it's gone sideways, a little bit digested. And we can take a look at it. If you haven't hit that like button yet, hit that to help the YouTube algorithm. And let's jump in.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So guys, here is the chart. And if we look at this chart, it looks incredible, okay? Shaping up, it looks like a flag. There's no question, and it's super compressed. It just looks amazing. Is it up 50% from earnings? Yeah, it is, okay. But at the same time, the stock kind of trades in a way that is a little bit different than maybe your average stock on the US stock exchange. So the US stock exchange, your average US stock on the NASDAQ and the NYSE. This is a Chinese stock, okay, that's trading on the NASDAQ. So there's a line, and it's a change of character, breaking through that line with some volume. The MACD is curling up as well. Now, I'm not saying that you want to get super zoned in on what's happening down here. I'll show you what I'm doing so it's not behind the video. But look, it is turning up, and these moving averages are getting crossed. So that's basically what's going on. And it's forming another flag, which we can see very clearly on the daily. Now, for people who, we'll get into the price levels and all that, but for people who are not all about price levels, let's take a look at what exactly the stock does and a little bit about, yeah, it's up 60%. It's at a near its 52-week high. Is that accurate? Near its 50, I mean, I'm sure it's accurate, but it just seems dubious. 52 weeks. No, it's definitely at its 52-week high. So that's why we double check ChatGPT. Okay, but there were some DeepSeek definitely ruined the US stock market in March, and that was sort of, well, DeepSeek actually happened, I believe, sort of right before the tariffs, I think, somewhere in here. I feel like this was DeepSeek, definitely. That had to have been DeepSeek. Somewhere in here. Yeah, I actually bought the dip and sold, but don't worry about that. During that time, Baidu did what? Well, when we scroll back to December of 2024, this is what Baidu was doing. Basically nothing, and then it started moving up. So it's kind of like, I mean, it did drop during the tariffs. You can see the green is the SPY in the background, but in general, the stock really hasn't done anything. Okay, it's just gone sideways until this earnings, which was absolutely insane move. And Cathie Wood bought somewhere around here is when her Form 4 came out, so maybe she bought somewhere in here. But her position is not that big. think it's a 1% position of a 6 billion fund, so maybe 60 million. I mean, it is big, but in terms of her entire fund. This analyst upgrades are always dubious and insane, but this is definitely big. And you know what? It's almost got the 150, so it doesn't sound so crazy anymore. This is always a challenge for these sort of meta type Google companies, is are they able to advertise? So this is where they get their money. You know, Google Cloud accounts for a big percentage of Google's revenue, but this is still a problem. And then this is a challenge as well. Alibaba is the juggernaut, and if their CEO, Baidu CEO, is not in a big meeting with their president, that sort of can be worrisome given the whole Jack Ma being missing situation that always hangs over the head of Chinese stocks. But here's Kathy Wood's buy. Okay, 80,000 shares, 10 million. So it's actually less than 1%. It's actually only 0.25%, but it's not nothing. It's also not like enough to, in and of itself, throw our weight behind Baidu. Luckily, we're not really buying it because Kathy bought it. I already said I think she bought it at a price that is not necessarily accurate. And this sort of flag, there's probably an opportunity to buy it and have very little risk without worrying about even what this company does. Okay, if we look back, there haven't really been, I mean, there have been gap downs, but in terms of flags like this resulting in a gap down, there's usually been some chop accompanying it. So it's unlikely that it just gaps down in the sense that you worry about with a biotech, like this HIM's gap down, for example, overnight. Pretty gnarly. Not too much concern in that vein. So here's the chart. We're talking about some price levels now. Notably, that $140 level is definitely interesting. And then $150 is going to be pretty notable as well. Everyone's going to be looking at that level, going all the way back to 2022 when the whole market went down. Baidu went down as well. So before we get there though, can you buy this? This is the all-time high over here. Can you buy this and look to get over that all-time high? Yes. Okay. That's the make $10, risk $1 sort of strategy. And is it probable that you'll be able to, this is yesterday, this is today, risk just $1? I don't know. You might have to risk a couple dollars and try to make $20, but making $20 a share on this doesn't seem too crazy when it just went, 20%. In other words, 115 to 135 is $20 a share in a single day. Well, 2 days, almost a single day, depending on how you bought it there. But you don't have to rely on a single day. I'm just giving an example that this thing has been explosive. You can risk a couple dollars. Maybe you'll get shaken out, maybe you won't, but super tight compressed candle, best way to get your risk reward. And for the people that don't do charts, look, they're in hot sectors. Driverless robo-taxis. I feel like this is redundant, but they are pushing out models, of course, for their ranking algorithms for their search. It's not Google search, it's just search. We just use Google as a synonymous word for search here. And then this live streaming they're getting into as well, which China is far in the lead. I think they make about 40 billion, something like 30% of all commerce is through like live selling or something. Commerce is the wrong word, but e-commerce is live selling. So that's insane if you think about how often you would buy something by watching someone in a YouTube live or TikTok live. In the US, you barely ever have bought, you probably haven't bought anything off of TikTok live, but in China it's huge, 20-30%. Don't quote me exactly, but it's up there. It literally is above 20%, I believe. Now, apart from those concerns with the loss of the contract. There have been, I think, not really anything else that's been too worrisome. Kind of talked about all these things already. This absence is just such a scary word after that Jack Ma situation, but that was just one meeting, so it was just sort of being absent in the AI conversation, so it's a little more specific than actually literally being absent. Here's another company that Kathy Wood took a stake in, that's Baba, and that thing has just been crushing. This one I can't really say it is worth buying, compared to this one, which actually gives a shot to get in at low risk. Here you're just constantly chasing no matter where you buy it, so that's not really healthy. JD, PDD, Billy. As far as JD and Billy looks okay. It's kind of choppy, and then PDD looks great as well. So, but recently talked about that. Other than that, Baba is the main competitor. We already talked about them losing the Apple contract to Baba. Tencent is definitely in the conversation. I'm not sure this moves in a way that you want to get involved in it at all. Of course, the yen is how you want to, you look at gold if you want to buy a gold stock. You look at the yen if you want to buy a Chinese stock. It's always a little gappy because of the time zone difference, but it looks fine. And I think, I keep looking at Baba, Baidu is remarkably ungappy, given that it trades like a US stock, basically. So besides that massive sideways move, so don't really have to worry about these other ones. This is always a challenge with China. I'm sure they'd say the same thing about the US regulatory environment, given our TikTok smorgasbord over the past year, or who's going to own it, whether it's going to get shut down. Don't have to worry about that. No one's talking about Baidu getting shut down right now, so think of this as a safer investment than TikTok if TikTok were publicly traded. All that to say, risk a couple dollars, go for 5. I think 130 is a pretty clear level. Maybe you can wait for it to come down here and buy here, but if it comes down here, it's going to turn into a bear flag, or in other words, the stock might go down, and it's probably just going to go up here anyway, so might never go down. So that is kind of the play. If you like these sort of ideas, there is a new stock Discord. I want to emphasize it's new. So there have been some exceptional results, and I can show you those right here. There's one, just to give you one at a time. And then here is another one. Granted, the market has been awesome the last few weeks, so these results might not represent your results. I think that's fair to say. This is not an income claim. However, these folks, I would say they got their $25 worth of value, if not $275, $300 worth of value once they start the monthly membership. And if you want to jump into this Discord, again, it is new, but that offers an opportunity to people who want to take advantage of it because you can ask a lot of questions. Go ahead and jump in there. It's $25 for 7 days, and if that's interesting to you, I will see you in there. Don't join if you don't want to ask questions, or if you're looking for a very, just a hodgepodge of ideas. Okay, it's really like a one-on-one environment. All right. If you haven't hit that subscribe button, I'll see you in the next one. And make sure you watch Baidu, not financial advice.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's take a look at what else Felix is up to here. Corey, sorry.
waiting for it to break 189. Dark pool data shows me that over $60 million went into call options 6 months out on Palantir. I have a specific date and a specific strike price that I gave to my Discord, and we're already up on that. And if Palantir is to go up another $10 or $15, and we'll potentially make 2 to 3, maybe even 4x on this trade. It's looking very strong, and it's going to depend on how things go over the next few months. But once Palantir runs above 185, 190, it's going to be a very, very good play for us. It's already good. We're already in the profit. But Palantir looks like it is poised to break 200 plus by end of year. Sofi is another strong stock. I called this one out last year when it was $6, and I told everyone to buy it during the dip in April when it went down to $9. I even told everyone to buy it right here at $20. I said this is still a great price to buy, and the stock is now over $27. It was over $30. I think it could pull back deep into the 24, 25 range, maybe 26, and this would be yet again another opportunity to add to your position or get in for the first time to hold long term. But right now it has moved so much, I would be cautious because the AVP is really in the $15 to $18 range. And now I'm going to be moving my AVP up to $16 to $22. And even with that happening, we're still $8 or $5 out of the money right now on the AVP. AVP is a strategy that I teach in my Discord along my DFib, double stochastics, RSI, DRSI, and D Fibonacci. I teach these strategies, very powerful, the best strategies I have ever used. My students love it. I've designed it off hedge funds and dark pool data, and I teach it exclusively to Discord students. This is what I use to gauge these stocks and these trades, and it's how we're making so many profits in the market. And it really, really, truly is a game changer. I told everybody that SPY was likely to break 640, 630, 640 by end of summer. We pushed 660,
JMIA,
actually
that's
667,
awesome.
almost 670 on the SPY. And it's looking strong, making higher lows and higher highs all the way through. Very strong. SPY could break 700 by New Year or spring. Very, very possible. I think 680 by New Year's is very, very realistic, but this is going to depend on a lot of things. Interest rate cuts, market breadth, the strength of everything overall, the sentiment, world economy, world economics, geopolitical issues, interest rate cuts, GDP growth rate of the United States. A lot of things goes into this. So it is possible, and it's looking very strong, but there's also that potential possibility that SPY could pull back into the 640 range, maybe even the 630 range. 630, 640 could be possible if something goes wrong, or if data comes out poor this week, we could see a drop. So be aware of this, be cautious, and also follow rules and don't position yourself in any one stock or one ETF or anything like that. You want to be very, very safe. I told you guys I would show you a very powerful strategy that you can use today to gauge what is likely, almost guaranteed to happen tomorrow throughout this week to give you a head start on the market. But before we do that, if you're having trouble trying to understand the market, maybe you have money in a retirement account, maybe an IRA, maybe you're looking to trade in your margin account, you don't know where to begin, you're having trouble, you just don't know what to do. I would love to help you. Helping students just like you is what drives me every single day. It's how I achieved my dream life over the past 5 years, pretty much being able to buy a new house, new cars, and do the things I want to do. Take action right now. Don't put off today for tomorrow, because when you do that, other people have put off yesterday for today and you're behind. Take action now. Let me show you what you're doing wrong. You can get started. The link to get started with Discord is below. Let me show you how you can live your best life just like I'm doing right now, doing the things that I want to do and spending time with my family. But don't take my word for it. Let's take a listen to my student Mike had to say. So we are here with Mike, and Mike has actually been in my Discord since virtually day one. So I'd like to introduce Mike. Mike, tell us a little bit about yourself.
Hi, Corey. My name is Mike. I'm 73 years old, and I joined the Discord to learn strategies to earn passive income. I started out with 25,000 and it's now 84,000. Can't believe it.
That is awesome. That's like a 3x return in 1 year. That's a lot.
I love it. I can't wait to get up in the morning.
Awesome. That is the goal. I'm very, very happy to hear it.
The biggest benefit for me was when we had the 2 coaching calls a week. You can interact with yourself in the coaching calls, and you tell us what's going on with the current events. I just eat that stuff up because I do a lot of reading. Coaching calls bring you up to date and put you in the moment, so you don't feel like you're missing everything. I would tell them that once they they go into the training modules and learn all the strategies. And we post trades in the Discord. And if you take the trades and you're hitting it over 80% success rate, how can you go wrong? It's a fun ride. And boot camp's a blast. They'll have fun with the boot camp. You really learn a lot. You're able to really interact one-on-one with you. And well, who says you can't teach an old dog new tricks? The community in the Discord pulls up other members in the community, and you can interact in general chat. And then when you have specific questions, you can go to the Ask Corey section. It's all there for you. You just have to do it. You're happy. Get a bunch of small wins. You get happier and happier. You'll love it.
So you heard my student Mike had to say, if you want this to be your success story, take action now. The link to get started is below. I put out trades on Tempest AI, which you can see right there, as well as XLV. You can see that there as well. We printed thousands of dollars, as well as my Oracle trades, my Meta trades, and Broadcom Snowflake students. You can see all the profits here have made $100,000, $150,000, $130,000 one trade one day. Students have made $50,000 in a week. We are making money in the Discord because we are making proactive decisions based on dark pool data and my trades and how I coach you and teach you to mitigate risk and take on the trades that are highly likely to make money. If you want to learn my secrets and how I trade and how I understand the market, and I can show you how to do the exact same thing, the link to get started in Discord is below, and I look forward to seeing you in the Discord real soon. So what you're looking for is you are looking to go to the MES, which is the Micro Mini S&P Futures. And this opens up at 6 p.m. tonight, Sunday, and it will show you almost for sure what's likely to happen tomorrow morning. And
we're a little delayed.
This is because the stock market opens up in China and Japan at 8 p.m. Eastern, 9 p.m. Eastern, and in Europe, London specifically, at 2 a.m. Eastern. So if you see this gap up, then it's likely to have a good day tomorrow. If it gaps down, then tomorrow is highly likely to have a bad day or a neutral day. If it gaps up, the current price becomes support. And if it gaps down, the current price becomes resistance. And I will show you exactly what I'm talking about. When we go back to the date of May 12th, look at the big gap up here that happened on Sunday, May 11th. MES gapped up at 6 p.m. on Sunday, May 11th. Now, if we go back and look at Sunday, May 11th on the SPY, it's the exact same thing. You'll see right here, Sunday, May 11th, Monday, May 12th, SPY gapped all the way up, just like the MES. And if we go over here and we look at Meta, you'll see the exact same thing on Meta. Watch this right here. See, Sunday, May 11th, Monday, May 12th. Big gap up on the SPY. We could do the exact same thing on Tesla too. If we go back here, Friday, May 9th, Monday, May 12th, Tesla gapped up. So you can see very clearly that whatever happens on the MES on Sunday night is indicative pretty much of what's going to happen Monday morning. So this is going to give you guys a very strong idea tonight, 6 p.m. Eastern time, of what the market's sentiment and what the world is trading overnight hours in the evening on Sunday going into Monday. In the stock market, very powerful. This will give you the insight that you need. This week is going to be a volatile one, most likely. Be careful, manage your risk accordingly. If you want to learn how I manage risk and you want to learn how to trade and change your game, if you want to learn how I trade, manage risk, and change your game, I would love to help you understand the trades. If you jump into Discord with me, I will have dark pool trades for you and teach you how to access trades that dark pool has hedge funds are taking and to make the money that we're making. I would love to help you. You guys can join my Discord at any time. The link to get started is below. I look forward to seeing you real soon.
Okay. Let's talk about a ticker here, not about the Discord situation here for Corey. So this is sort of a dark horse ticker breakdown we're going to do here, to say the least. But you know what? Sometimes you have to do some stocks that people aren't looking at. I mean, this revenue is crazy, so that has to be the main catalyst. Now, given all that, this revenue? It's actually not up that much, but the year over year is up a ton. It's hard to say. Just straight up ask. Just think of your question and straight up ask ChatGPT. That's the whole point of ChatGPT. Oh, okay. That's why. The profit margin. Cash burn. There we go. Yeah. That's what we're talking about. Same GMV. Bigger revenue. Got that cash burn down. Okay, so let's jump into a breakdown. That seems pretty telling. Do have to figure out how to get this thing. Oh dear. We're all out of sorts here. Should be able to go like this too. Just want to make sure I have this set up here that is super duper easy to work with here. Okay, got all my time frames up here. And here's JMIA on a 5-year. Of course, it is a down bottom bouncer, but 3-year kind of tell the story. Wow. This thing is extended, but you know what? So was Baidu. Alright, if you have any questions, if you're on X, head over to YouTube. We can chat over there. Otherwise, let's continue here with a little bit of a breakdown on the Amazon of Africa. Okay. There's one stock that is about to break out. In my opinion, it's the Amazon of Africa, as it's called. The ticker is JMIA. And the revenue of Q2 was massive, leading to a huge jump in the stock price. Cash burn also halved. So those numbers combined created this rocket ship. Why buy it now? Well, it started to digest and it looks like it's going to go up. We can take a look at the chart, but for people who don't like charts, we'll also jump into what does it mean to be the Amazon of Africa, and why, as someone who's investing in the US stock market, do you want to invest in this company? If you haven't hit that subscribe button, hit that button, and let's get going.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So here is the chart on this dark horse stock candidate. So if we zoom out, this thing has just gone down from the peak of 70, and in the past year we can see that, well, basically just barely gone up. This was a little over a year ago, and now we're reaching this sort of high. So this number is going to be super relevant, 15.5. This is like basically a penny stock. It's just over $10. However, there's a ton of volume, and for almost everyone watching this, this is still a great opportunity because a lot of big accounts are not able to play this. Now, that also comes with its trade-offs, because you want big accounts because you want a lot of people to be able to see the same breakouts that you're seeing. But it does follow that characteristic that we've sort of seen, even to a greater degree, up 30%, down 15, up 30, down 15. So it looks like we have another up 30, down 15, tested this moving average, and then we're building up. We'll go into exactly, the numbers and where to buy it and all that, but do want to satisfy people who want to know what's going on here. And here's the financial performance. So Q2 revenue was up 25% year over year, and up maybe 15% from Q1, and the cash burn was basically cut in almost half. So that's the big story here. This is how much merchandise was sold on their platform. It's not a lot, right? I mean, compared to like Amazon or TikTok, but compared to every other company that's trying to do e-commerce, this is a lot, especially for a country that's not the US, okay? Not that Africa's a country, you get what I'm saying here. So let's take a look a little bit at what this company is. There aren't really similar tickers, which may not come as a surprise, but let's get situated here. JMIA Technologies is the company. And look, they're not break even yet, but think about Amazon took 20 years, okay? So this is the big story, the 25% year-over-year increase and GMV rising as well. I don't think it's just that these surpassed the analyst expectations. I think it's also the cash burn we saw. A couple other pieces of info. Not working in South Africa is, slightly eyebrow raising because you got to think there's a lot of people spending money there. But if this is, their prime markets, then so be it. So Morocco as well is, it's already spoken to up there, but big sort of, it's on the ocean. Okay, so this makes sense. An e-commerce company operating on the ocean. Don't really need to focus too much on this kind of stuff in terms of investing, but it's always nice that they are projecting a investor-friendly image. So this is awesome. Okay, but look, here is what we're trying to figure out is, are they actually the Amazon of Africa? That's what everyone's trying to figure out, because of course, if Alibaba is the Amazon of China, that's very investable. And Kathy Wood just bought Alibaba actually, and we can sort of see that this stock movement has been insane, okay, since Q2 earnings in very similar fashion, 50%. So it kind of makes sense why JMIA would go up, well, more than 50%. It's a penny stock, so it actually went up 150%. But we're sort of seeing the story here of these similar to Amazon type companies. But it sounds like this is their competitor that may be driving them out of the South African market, and that is a challenge. There's another company as well in Nigeria, which I think is a big populous country. And then there are some, can't imagine this is that big a competitor if they're headquartered in Hong Kong. But if phones are a big portion of their GMV, gross merchandise value, then I guess it could be a competitor. And then another South African company. So I'm not going to pretend I know what these companies are really doing or who is their main competitor, but it sounds like if they can't get into South Africa, that could be a challenge, and people are definitely going after the South African market because that's where there's a lot of opportunity to get customers. So look, this is another risk factor, I suppose. 25% year-over-year decline in revenue in Q1 2024. So that was a while ago, but if we look at that, this is basically what the stock did over here. Q1 earnings would have been here. Yeah, no, this would have been, that doesn't make sense. That would have been what? Q4 earnings, 2023? Yeah, this is Q4 earnings of 2023. This would have been Q1. But pretty much this stock is going up on earnings. I mean, it's obviously, this is Q2, this is Q3 2024, this is Q4 2024. I'm not sure about this piece of information, but the bottom line, which they are effectively pointing out, is this revenue move is not sustainable. So they are going to have earnings in November. So that's enough away where you don't want to buy a stock in earnings. You don't want to hold a stock in earnings. You don't want to short a stock in earnings. So if you're going to buy this, you are looking for those sort of 3-day bursts that we're sort of talking about to sell half your position. So you sell half, you hold a little bit, you sell half, you hold. If it comes back, you have to sell it, or you just keep holding for it to continue to go up. And maybe you get a situation like, let's see if I can think of a new one here. Well, like Netflix on a 3-year chart, you know, right after this earnings year, Q1 earnings, sell half 10% off, then you just trail the rest, and you would have just held it all the way. Even if you sold here, you make another 10-15% depending on where you sold your first half, and you have such a small position, or it doesn't really matter. So that's sort of the name of the game. Of course, if you have a big position, you get shaken out anyway, so you can't take big positions of these stocks. Maybe you take an amount where you lose, 1% on your portfolio if you get stopped out at a maximum. So maybe you take a 10% of your portfolio position per stock at a maximum. You do you. I'm just trying to give some benchmarks here. So don't really need to look into this company too much because it's a penny stock, but all stocks pretty much go down at their IPO these days. I mean, Figma, even though it popped recently, it still went down. CoreWeave popped, and then sort of has been going up and down. And you can't look at OTC stocks because they're so thin, so we can't really look at that price action as a comparison. So all in all, this is basically why you don't do fundamental analysis on a penny stock. But what you do is you look at the price action. You say there's plenty of volume for people. This is $100 million traded here who have less than 10 million that they're trying to get into this at a max, which is, a lot of people, a lot of different investors who might put less than 10 million in this stock. So that's why it's on the list. Really more like 1 million would be more reasonable as a max to put in, 1 to 2 million. But all that to say, the smaller you are, the more agile you can be. And look at this line. Finally, we're getting to the levels here. This $12 hold dollar level is extremely powerful to have a whole dollar level, because a lot of people are going to think about that and sell or buy there. And then there's a lot of resistance. This is actually a while ago, more than a year ago. All-time high of 15 whole dollar level, pretty much 15.04. This level is 13-ish, so that's pretty much what we're talking about here. We don't really have to look back here. This volume is pictured here, but again, these people would have likely sold down to here. It's unlike there's many holding here. Typically, if this were here and then it went back up, they might sell. Bag holders might sell into that, and then it would go down. But because it's more than 6 months away, that's unlikely to happen. So all that to say, if it gets over 12, you can use 12 as support. If it gets over 13, you can look for that 15 level as a blue skies. So, if it gets over here, it's to all-time highs. Well, not all-time highs, but whatever it is, 76 week, 52 times 3, 156 week highs, 3-year highs. All right, we're going to go too detailed here with all the numbers and all the weeks and all that, but you get in, you risk 20 cents, 50 cents maybe, and you try to make a few dollars. If you risk 25 cents, you try to make $2.50 up to here, or $5. That's the play. That's what we're talking about. If you like these stock ideas, this one is definitely off the beaten path stock idea, but it's setting up very well technically. Typically when a stock sets up technically, it's exemplifying a balance of supply and demand, which means when there's more demand than supply, you're going to see an explosive move, which is the whole subject of this video. If you like these ideas, if you like a very curated selection of these ideas, in other words, if you just want the best one, head over to stockscommunity.com. I am in there providing what I think is the best one each morning. This video might come out at a later date, so this might not be as helpful as being in there. You can also ask questions in there. You could ask questions in YouTube comments, but I might not see them. I might see them super late. Of course, as this community grows, it's very new right now, but as it grows, there will be more and more voices providing more info that you can sort of get your bearings as far as what other people will say as well as me. But the benefit of being so new is you get to ask your questions directly. So if that's a benefit you're interested in, head over to stockscommunity.com. Try it out for $25 for 7 days. Hit that subscribe button if you haven't yet, and I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's jump into a little more Felix here. Should be able to do so here. And see what we're up to most recently. Maybe going back to Sunday futures. Of course, having a pretty okay day today in the market on Monday. Nvidia having a big day. But in general, market just kind of holding today. This is what we'll take a look at. It's hard to find very recent info that's very relatively accurate, but this will have to do. I think this.
No one is talking about the stock. It's almost as if they don't want you to know.
With a little bit of a intriguing spin as well.
So what if I told you that while you were sleeping on this opportunity, companies insiders are backing up the truck, buying over 1.3 million worth of their own shares? And what if I told you that this company just drilled oil wells with over 100% return? It has a debt to profit EBITDA ratio of just 1.1 and is sitting in the middle of the biggest oil industry consolidation we have seen in years. This isn't some penny stock pump scheme or crypto moonshot. This is AMPY Energy Corporation. Ticker symbol is AMPY. Charts on the screen here for you. And I'm going to show you exactly why this could be the most overlooked opportunity in the energy sector right now. Now, why the heck should you listen to me or Winston back there? Well, before we dive into that, let me be clear about something. I'm not here to sell you a get-rich-quick scheme. This is not a sponsored video. I never have. I never will take money from anybody trying to pump anything. I'm here to walk you through the facts, the numbers, the catalysts that make AMPY one of the most compelling value plays I've seen in the energy sector. My name is Felix Breen. That's Winston back there. We used to be ex-investment bankers who spent years watching how the big players really operate. And I've seen firsthand how they profit from you and me, the retail investors.
So,
I'm also the founder of the Goat Academy with over 20,000 students and the co-founder of Trade Vision, where we analyze market data that most retail investors never seen. Our mission after retiring is I'm dedicating my retirement to leveling the playing field, teaching regular people how to build real wealth instead of just enriching their bankers. And some of my recent stock calls have done rather well. Let me show you one or two of them when we jump into AMPY. How about MP Materials? We did a video on that 28th of April. The actual entry point was a little later than that. That's up about 173% right now. How about you? Well, we did a video on that here. Another one a little bit later there. And that's now up 174%. Well, how about LEU? That was just last week. Well, that went up really nicely, 15-16%. Now it's come down. Well, maybe you don't know how to sell. And guess what? Most people don't know how to sell. So I'm going to fix that for you too. Not in this video, but as an actual bonus. I'm going to run on Thursday at 9 p.m. New York time, a live training session teaching you Wall Street's rules on when to sell, when to take profits, because that's the number one lowest hanging fruit for all retail investors. If they just don't sell the winners and, they sell too early, actually. They sell the winners far too early and they don't sell the losers. And that's what holds you back, in my humble opinion. So let's jump straight into this here. Everything I'm about to share with you is backed by public filings, analyst reports, verified financial data. So I'll give you only verified information. Now, this isn't about hype, it's about fundamentals. So what's the bull case? What are the 5 reasons that AMPY could, in my humble opinion, at least double? Not a promise, obviously, but that's what I think. So what have we got? Number 1, we've got insiders. Now, there is a lovely quote from somebody, I can't remember who said that insiders sell for many reasons. Taxes, second yacht, fourth mistress, that sort of thing. But they only buy for one reason. They think their stock's going to go up. It's a powerful signal. And they know things about the business that we don't. They see the pipeline of opportunities. They see the internal projections, the strategic plans that haven't been announced yet. And we're seeing exactly that kind of insider confidence. So just in August, a company director purchased $1.3 million of his own shares, according to SEC filings. Not a small amount, serious money being put into this business. But what makes this even more interesting is that the same insider was recently appointed to the board of directors, and he's now their largest shareholder. The chap's called Clint. Isn't Clint a great name? Wouldn't you want to be born with a name like Clint? You would immediately be more handsome, more attractive, and richer, undoubtedly, right? When the biggest shareholder is buying more shares with his own money, it tells you kind of everything you need to know about where he thinks the stock's heading. And then secondly, we have Wall Street, the guys who are not talking about the stock. Because have you seen a video on AMPY on YouTube? I certainly have, or anywhere else. Probably won't find one. But those guys see 83% upside. Now, I always say analysts are a bit like sheep. No offense to the sheep. They tend to follow. They're not usually early. And yes, they're following a little bit, because if you go back to the chart here, the real bottom of the market was down here at about 250, and we were moving up quite nicely. But if you're a little bit of a chartist like me, you simply draw some trend lines, and you see we're actually breaking out of that trend line. So we're about to accelerate. We're about to move up to where the stock probably should be. So analysts have an $8.50 per share price target. And I always think analysts are conservative nitwits, but even that would be about an 80% upside. There are people also actually with $11 on the higher end of that, but let's just take the average, which is what we're looking at here. Now, point number 3, and this is where it gets exciting, is they're drilling, baby drill. And they're not just drilling, but they're drilling wells, and they're making 100% return on that. Imagine buying an apartment, like a condo, and it goes up in value by 100%, or you're getting 100% of its value in rent, right? That's kind of exciting. So they literally have these oil wells. Here is one that's called C54, which is a rather cryptic name. And this was completed in April this year, April 2025. It's producing 850 barrels per day of oil. And guess what? It's going to pay for itself, excuse my handwriting, in 8 months. So again, it is like buying a condo or a house and renting it out. And in just 8 months, the rent you're getting is covering the entire purchase of that. Crazy stuff. And by the way, that doesn't happen with homes. It just doesn't happen. So most oil companies, to give you a little bit of perspective, are not looking for 100% returns. Certainly not in a year. They're usually looking at 20 to 30%. That's normal. That's AMPY. So they're generating 3 or 4 times higher.
All right. Those are some good returns, but let's talk about a little breakdown here on Microsoft. AKA OpenAI's mothership. Okay, so there is one stock that is about to break out, in my opinion. The stock is the 49% owner of ChatGPT. You can't buy ChatGPT, OpenAI that is, on the public market. The valuation is over 300 billion, approaching 500 billion. The stock that owns ChatGPT, 49% of it, is Microsoft MSFT. Who would have thought we'd be talking about Microsoft as the technological innovation leader in 2025? But they absolutely proved us wrong with Azure, and now they're proving us wrong again with the biggest user of Azure, so their cloud database. So let's take a look at that stock. If you haven't hit that subscribe button, hit that down below, wherever that is, and let's get going.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
We do have some recent results in our Discord as well. Check out that one right there. That is just in the last few weeks. And then also over here, this is literally verbatim from the Discord right there. And that's a pretty good result. Pause your screen, take a look at that. And now we'll get in. Okay, so here is a little info on Microsoft, recent news. But for people who aren't too concerned with the minutia of, agentic AI and the vision for this dinosaur company to take over the world by owning OpenAI. Sounds exciting, doesn't it? Let's just jump into the chart a little bit, okay? Which is how we found this opportunity in the first place. It's basically gone sideways for a while, okay? I know we're in library mode, being quiet here, but I'll try to get excited about this company that moves 1% a day. For those people that like a safe opportunity, this is it, okay? If you could only lose 1%, that's pretty safe. Now, is it a good time to get in? Well, it's basing. It did have this down move on the 5th. If we go over here and zoom in, double click, as Satya Nadella might say, on the 5th. Well, I can double click in a second, but the real point is that besides that move, Microsoft hasn't really had any major concerns, so that's positive. We'll get to that, but this thing's been going sideways and it's holding these compressed days. The moving average is sort of aligned. Specifically, this is the 50-day. This is the 20. And why this is interesting was as the 20 gets above the 50-day, the 5 gets above the 10, which it is right now, they're going to start to unravel and this thing's going to start to go up. You don't have to know what color is what. You can just trust me on that basically all these lines are together. And when that happens, this thing can go up, okay? And we can sort of look at that here. You can see how all the lines start to come together. They get really compressed and then boom. And this is great because you can sell half your position when you're up 5-10%. And then if you have a downward move, you can sell the other half and you just made a bunch of money while only risking, 1%, which might be, $5 on a company like this, $3 to $5, maybe a little less. You do you as far as your risk, but the whole point is that when those lines come together, which is just another way to give an indication of what we're seeing on the chart, which is that you can see how tight it's getting, how here it was kind of loosey-goosey, to say it in a silly way, but professionals would say now this tight volume compressing action with a tapering of volume is looking like it's going to create a move to the upside. When there's not much volume, it means there's not much sellers. You see how there was a lot of volume here? That was a lot of sellers, okay? There was a lot of buyers here, okay? But you get the idea. Little volume means not a lot of sellers, maybe not a lot of buyers as well, but eventually when these lines come together, we create sort of a flag, and when a flag gets created, moving averages come together, price movement gets established, in this case to the upside, and you can see how sometimes those just go absolutely bananas, okay? Sometimes they come back down a little bit and you have to sell some. You can see it actually did test here. So maybe you take 50% of your win here, you hold 50, and then you have to sell it here, and you only made like 15% or whatever, okay? But maybe you hold the other half and, you make an aggregate like 30-40%, which is pretty insane, okay? So that's what we're trying to achieve here. This moves about 1% a day as an average of the last 10 days, so that's why it's such a safe entry. Now, we're 5 minutes in. We still haven't talked about what the company does, but it's Microsoft, so forgive me, right? This is their Copilot AI, which you've probably seen. They own GitHub. They own half of OpenAI. They're basically an AI monster, okay? Even though we associate them with, being a dinosaur in the computing world. We don't have to worry about this too much, okay? This computer I'm recording on, this is literally on Windows 10. So all this is pretty much fine in terms of risk factors. This is the most interesting, given that OpenAI is such an unknown valuation. So as of April, okay, see, this is the number 500 billion when they raised that additional 6 billion. So they increased in like just a handful of months their valuation by like 60%, which is insane. Plus their revenue, 12 billion annualized. And it's not like hey, we did revenue for a week and then we multiplied it by 52. It's like, no, by half of the year, they're at like 6 billion revenue. Okay, which is up 3 times since last year, which is insane because again, we're in the billions. So of course, there is this cash burn, okay? But this is basically when everyone gets asked this question, like, is it a bubble? They're burning money. It's not a profitable company. It's like, well, look around at everyone else on the table and say, are people going to stop buying this company? And the answer seems to be no at this point. So as long as Microsoft owns this 49% stake, they basically increased their market cap by 250 billion if OpenAI is worth 500 billion. So that's the bull case for Microsoft. Nvidia did recently invest in OpenAI. CoreWeave is sort of the underbelly for OpenAI. They also have a bunch of debt, 10 billion of debt. So OpenAI is sort of the story for Microsoft right now. Oracle's also in the mix as well. This is the tension, right? If OpenAI can be less reliant on Microsoft, then eventually Microsoft could just buy out OpenAI's stake, and then OpenAI could be free from Microsoft. But that's only tenable if OpenAI's actual valuation extends to like, $1 trillion or more, because they have to find the 250 billion to pay Microsoft to, buy them out. So it's a crazy scenario, and we don't have to think too far into the future. All we really have to say is that all these companies are battling it out. They're all paying Nvidia, which is why Nvidia is the most valuable company, even though it only has 4 customers. Basically, these are the customers. I mean, they're unnamed, but it's pretty clear these are the customers. Maybe Tesla as well, XAI, whatever you want to call it. I don't know which holding company XAI is in, what structure owns it. I think it's a privately held structure, so I don't think it's connected to Tesla, although, in practice it obviously is. We could yap about this all we want, but at the end of the day, this is the chart, okay? That OpenAI revenue news has helped Microsoft skyrocket. This earnings was pretty solid as well. This is Q1 earnings. A lot of companies did great on Q1 earnings, but notably, Microsoft actually had a positive earnings to Q2 earnings reaction. Did sell off here, but again, compared to some other companies, well, this is not a great example because Google had a great run, but I'm trying to think of social media companies that had poor Q2 earnings. Snap is an example of that, because there were a lot of companies in other sectors that had poor Q2 earnings, reactions that weren't incredible. Chevron's not a great example because it just sort of chopped sideways. The example I always come back to is Trade Dex, because that's like the most extreme example. But in general, I know a lot of companies sort of went sideways, sort of did okay. Even Meta was one of the greatest ones, and it still sort of sold off half of it. So all in all, I think you have to say Microsoft Q2 earnings was not great, and now we're getting an opportunity to buy them, not based on their earnings, but on their ownership of OpenAI, which is I believe it is the highest valued privately held company in the world. Certainly the fastest growing, that's above 100 billion, and that includes Stripe. But that's the buy. Risk a few dollars, make 10, 20. If you risk $3, maybe you go for $30 a share as a target, but really, sell 10% of your position when you're up 5 to 10%. So yeah, that is about $30-ish. You get the idea? If you like these ideas, head over to stockscommunity.com. We are building a community. It is a new community. I want to caution you. These testimonials are real from folks who found success in the community. Excuse the music. Here and here. Okay? Pretty exceptional testimonials. That's not necessarily going to be your result. However, those folks had good results. There's also just, it's a small handful of people there. Sometimes people will try a trial. You can try a trial. It's $25. Try it out for 7 days. But you get one-on-one attention, which is not going to be the case as this community grows. So that is the positive impetus for checking it out, joining. If you're looking for like a flurry of information, like a news feed that some of is probably highly dubious, this ain't for you. There are places where you can get that sort of feed, food. This is more curated and one-on-one. Check it out if that's your idea of a good time. And I will see you in the next one. Hit that subscribe button if you want to be notified.
This is Sam Putnam.
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 This is Sam Putnam.